And today's pretty straightforward. Like literally the morning, we clearly saw an inverse head and shoulders that was to play out back to the blue line and the B points above. We got that, absolutely nailed it. There was little B points that it left down here. It came down to the 61, cleaned up every single one of those targets. Then I put targets up here, and it cleared every single one of those targets. So from all of this movement here, to all of this movement here, to all of this movement here, and beyond, I mean, people shouldn't sell their whole position here. It should be like the target's up here. And when we get there, it might stop for a second to come back to this high, but I want to see it go up to these points up here. Like I'm holding for hundreds of points, thousands of dollars. I'm not trying to fumble out of a little crappy day trade and not be in for the move that counts. Because this is a big day, big moves, big money. Not trying to escape with a little bit of profit before the market takes it back. It's not one of those days. It's a big day for a big strategy, and be positioned very well for the end of the day is very important for me. It means it's going to be easier to hedge it. And the name of the game today, and I'm like, what I think everyone in here should be aspiring to do is to position themselves in the best way possible. And what is that way? Not just to be in one way, but to be long from the bottom and to keep it, doing everything that you can do today. It's your job to keep that long and to hedge against it. It's your job to find a short against that long trade for the end of the day and to get your stop and profit on both of the positions. That is the job. And until I have that, I am not comfortable. So that's the deal. And everybody else should be the same way because, you shouldn't settle for anything less than the best. And if there is a best way, well then why not aspire to making it the way for you? And if you could write it down, if you could say, hey, the best way for me to be exposed to earnings today is to hold this long from the bottom and then find a short trade. Because imagine this, right? Imagine this. Imagine you went long on the market down here and you're long from down here and you bought, right? And the earnings report, it happens over here. So let's say it comes all the way up to the high and you keep your long, you keep your long, you keep this buy order, you keep it no matter what, and you open up a new security and you find a short trade. And now that goes down to this point for the earnings. Now, if that was to be the case, you can put your stop loss and profit on your long, your stop loss and profit on your short, and if it explodes through the roof, this will make a bunch of money. This will make 10 bucks. This will make 20 bucks. That's fine. Now, let's say if it blows through the ground, this will make 20 bucks. This will make 10 bucks. This will make a ton of money. What better way could we be positioned than to hedge? What do you think the hedge funds with all the money are going to be doing today? Clearly, they're long on AMD. What's up?
Does this work really? Wait. Damn. But isn't this plus minus zero? You know what I mean?
No, no, no. So we there's two types of contracts that we have. So NQ is one of the larger contracts. It's called a mini contract, and it moves at $20 a point. So uh, each time that this 14302 moves 1 point, that moves $20. And then we have one where it's MNQ, which is a micro, and this only moves $2 per point. So every time that this moves 1 point, this moves $2. So this is worth 10 times what this is worth. So if you have one of these at the bottom, in NQ, you can actually hedge with MNQ. You can so until you have 10 MNQ. So if you had one NQ at the bottom, and then your goal at the end of the day was to try and acquire some, like you could try and acquire 10 MNQ against it. And at that point, if it goes up, you're making money on NQ. And if it goes down, you're making money on 10 MNQ. But the thing is what I teach is to go in with half. So let's say, for instance, if you have one NQ at the bottom there, and let's say you're holding it, holding it, holding it, and it goes up like this, right? And we can see that there's opportunity to take these levels here. You don't want to give this up, but you take 5 MNQ here, and then you take it down, you take one off here, you take another one off here, and then you take another one off here, and another one off here, and essentially, all of that money that you can make on MNQ, you make that while you're still holding this NQ at the bottom. This is what the people on Wall Street do. Like, they name themselves after it. It's called hedging. And this is basically when you take a long-term trade. Like, imagine you're a hedge fund and you've been in from 1965 and you've been buying Apple. You've been, well, so imagine they were around. You've been buying fucking every stock that was around in the 60s. Apple wasn't around then, but whatever. The idea that that they've been buying, like, all these major companies like Microsoft and stuff. um, they uh, they've been holding and holding and holding. They have trillions of dollars in all of these stocks. So when it comes to the point where it's a little risky to hold it, and they can't sell the whole position, or else it'll literally tank. If they tried to sell like $10 million worth of Microsoft, they would probably lose 20% instantly, just because it would seem like everybody is trying to sell because they're trying to put $10 million worth of sell orders in there. So it'll take a very, very big hit. So it's not a good strategy when things go south to try and sell. Another thing that you do when you sell is you lose that control. You don't get to fire the CEO anymore. You don't get to control the company anymore. So they don't like to give that control up. So what do they do instead? They say, all right, I'm in on Microsoft for $10 trillion, and I'll take a short against it with, one NQ, or well, like 100 NQs, and then literally as it's dipping down a little bit, they're holding for 10 years. But every single tiny little dip that they make, they can take a profit on it as well. And while you're holding for the long term, holding the long trade, you take each one of these little dips, each one of these little dips, each one of these little dips as long along the way. And basically, not too far off where I'll have a picture of doing that here.
Wait, so how do you, so if this strategy works, I think it works, of course, but how would you make minus? Like, how would you take a loss?
What do you mean?
Like with this strategy, it sounds like you just can make a profit, but there isn't there a possibility? I don't understand. So is this a 100% sure thing?
No, no, no. So like it's like basically it's easy to fuck it up. Like instantly, like if you're long on NQ like this, one NQ, and let's say for instance it's going up, 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 and then you short 5 MNQ, uh, you can lose money on this MNQ, but like at the end of the day, okay, look at this. This is NQ, right? And if you take half of the position against it and lose money, for the time that you're losing money, you're just making half on this. So if this NQ is worth 10 MNQ, right? If I take 5 and lose money on it, that means I'm only making 5 on NQ because it's worth 10. So that means that it's such a great strategy, because at the end of the day, if I lose money on shorting 5, I'm making 10 value on long all the time. So let's say, you know how I have to lose money? I have to lose money by shorting at the same spot twice. Because at the end of the day, if it goes up and then I short it with 5 and it goes up again, for that moment that it's going up and I'm losing on 5, I actually have still 5 from the bottom because it's worth 10. So if I'm trading 5 against it, that means I'm still going at 5. So basically, if you have 10 going, basically, then that means you've got uh, the full position size against your NQ. So that means that if I took 10 up here instead of 5, then that means that the entire 10 will cancel out my 1 NQ. So if I lose money on that 10, then I won't be making any money on NQ while I'm losing money on the 10. But if I use less than half of my position size that I'm holding from the bottom, that's why, like, I think that it's literally designed for people to acquire positions on NQ and then trade against it with MNQ while it's coming down, MNQ down, MNQ down, MNQ down, and you hold this up the whole way. Now, look at this picture right here. So on this one, basically, I went long and then kept it, kept it, kept it, kept it, while every single time that it came down, I made a profit on it, 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 every single time it's dipping down. And I'm holding long, up, 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 and then every single time it dips down, I make money on it. So,
What? Is
This
that on
is
two different
crazy.
accounts? Is that on two different accounts, John? Sorry, instead of
no,
one.
same account.
Oh, same account. Okay.
Yep, yep, yep.
Just realised, yeah, you can technically take two trades, can't you, on the same account?
Yeah, yeah. So this is NQ and this is MNQ. I keep the background dark on NQ just because I know I've actually turned it light now, so that every single time that I turn on NQ, it's like blinding me a little bit. It's like, wow. It's like, oh my God, your eyes open a little bit, your pupils dilate a little bit because it's literally bright, you know. And I'm
Yeah,
and
yeah.
I'm looking and I'm like, you know, mistakes now that that's NQ. You know what I
That's
mean?
crazy, that man. Yeah, for
Yeah.
sure.
Yeah, and it's like you get blinded a little bit because it kind of hurts your pupils a little bit if it's like because I got a 55 inch on my side monitor,
Yeah, yeah.
so it's kind of
I can
blinding.
see that. Gonna say though, once I pass this PA, that's definitely the way to go, right? I reckon. Definitely the way to go.
Yeah, yeah.
I think it's worth it right now trying to pass the account as it was.
Well, because imagine this, right? Like in this position that I mentioned here, like how there's a good chance like it's a short term and it could still come down to me. But imagine I bought this in 1965. If Microsoft went back to the price at 1965, they'd go out of business. Now, what kind of power is that? So
It'd
it's
be
like,
like $20 trillion or something.
yeah, I know, and like imagine when you're in for so far back on the company that it would have to go out of business to get you out. Why would you ever sell that? Like you instead if something was going to go wrong, take another trade against it and make money while you're waiting for it to go up. And nobody seems to do that. It's an incredible strategy used by professionals every single day. I teach it every single day. And and I don't expect everybody to get this down right away, okay? It's okay for it to take time. As I say, one of the worst words you can use in trading is quickly, because quickly means that you might not care about doing it the right way.
Yeah, I mean, I've been here for like what, a year and a half now, I think, and I'm just starting to get there properly. You know, I'm starting
Yeah,
to
yeah,
get into
exactly,
it
yeah.
properly.
Yep.
So I mean,
Genuine
it happens for
onward.
well, it happens for other people. I mean, like other people do it quicker than others, but some
And it
people
depends on how
just
much
release
time
it
you can
quick.
put into it too, for sure, yeah.
Yeah, 100%, right? 100%. If you're here
Uh,
enough, you will be profitable at the end. You just got to be really patient.
Yep.
Yeah, I need to. I think I'm still got my time. June, I'm gonna start actually putting money on this stuff. I'm doing okay as far as like keeping track of it on paper and all this, but I still don't have a good buying strategy, and I'm still learning all that.
The best bet is to do a Lilu account.
Yeah,
I
whenever
think
they
that's
do a
the way to go.
sale, which I
Yeah,
think
I
they
think
might
because
do one for Halloween or something.
yeah, I picked
So
up that bundle for $20, didn't I, the other day? So
Yeah,
it's a
yeah.
good price right now.
You would think they would do a good one for Halloween.
True, true. I thought so.
So if they can you hold on to those? Because I know I'm not ready, but also I know there's going to be more deals like for Christmas and New Year's and next
Right.
February and all this stuff. So is it?
They
Can you hold them once you?
they have an
Well,
expiry date.
yeah, they do. They're like
Technically
a
till the 10th, right?
yeah, it depends on the thing that you get. Like they have different packages, I guess you could say. And some of them are month to month where like if you like I mean I would think that when you get it you want to try and pass the account within the month um to be safe, but there is accounts where it's like if you need more time you basically pay the fee again and then you get to another month, which is like I'm like dude you're better off just getting another sale the next month if you didn't pass it within the month of your first sale kind of thing. You wouldn't want to like baby it or nothing like that. you know like it's kind of like if you don't want to pay their fees or nothing if you're not gonna trade on it.
may actually be what I do before I put my own money into it.
I think you should do that
It's
before.
like,
Yeah. I don't recommend putting your own money into it straight up. Like I think like using Lilu, like you should prepare fucking $250. You know, just out of the top of my head. You could even do it with 150 you wanted to, but I think $250 worth of Lilu's accounts is more than enough. Like if you allotted that amount of money. Yeah, and you're gonna be able to get like a ton of accounts with 250, and it wouldn't be the first one. I mean, like say the first account that you get, it might be like anywhere from $20 to $50, and that one, uh, like I wouldn't get your hopes up, like for it. So that's where the other part of the $250 comes from,
This is my third time trying this.
Exactly.
Like you can physically trade a lot more through Lilu, just with like that small lump sum.
So exactly. So that $20 or $50, whatever the first little fee's gonna be out of that 250, basically, is what you're gonna try to pass it with it. And when it does, if you do pass it, then that's phenomenal. But if you do fail, then you would want to make sure that you're still gonna go into some other accounts and so on, because like at the end of the day they'll give you an account and it's like what, like it has to be more than 25K, so you'll get to see what it's like to manage an account for 25K with 25K for less than $50. And you might have to do that 3 or 4 times. That's why I'm saying it could be like $250 altogether. But then you're gonna you will have managed like close to $500,000 worth of accounts, and instead of losing that amount of money on a live account, like one would have had to do like 20 years ago when they didn't have any kind of opportunities like this.
Yeah. Okay. Yeah, that makes all the sense in the world. Yeah, I think it's just get signed up with one of those. I'm still gonna hold off because I'm
Yeah,
still
yeah,
in limbo.
yeah. That's
That's
fine.
a good idea.
Yeah, it's like whenever if they ever do a sale where it's under $20, it's like you may as well just grab it. Honestly, like Christmas time.
And give it a go.
Yeah, because it's just $20 anyways, man. And it's like that little bit of money, you'd be surprised how much it can change your mindset. Even if it's $20, it'll be like, well, now you're invested in it, and and as much as it is, you might change your the way that you think about it. It increases
How
the
much do
intensity
you
a little bit.
possibly make off of $20 though? Like, how
Oh,
much do you make off of it?
they give you an account basically. So usually it would be like $150 to get an account, where it's like 25K account. You have to make $1,500 without losing $1,500. Then they allow you to keep the account after that, and they take 10%. And that's not a bad deal. So like that $20 has essentially got you the opportunity to earn a $25,000 account and then trade on it in perpetuity.
That's wild. But is it still their account? I guess.
Well, yeah, but your profit though, like I mean, it's the same essentially. Like it's their software, their data, their everything. But
You made the first 10 grand, right, as well. So
12 now, I think it is. Yeah.
yeah. And I believe for the first 3 months, right, you can only take out 1,000. You can only
Yeah.
take out 1,000 for the first 3 months. But for the first 30 days, you can't really take out anything. So you have to trade for 30 consecutive trading days, and they could take out $1,000, and then obviously like for 3 months, and then after the fourth month, you can take out as much as you want, I believe.
Okay, I'm gonna do it. That might speed up my time scale. Not really because I need to save the money, but I'm risk averse, so I've got other things going on. But $20 or $100 isn't risky in my opinion.
Yeah,
I
exactly.
think it's $20. Yeah.
Yeah.
These I've actually got a bundle account, so you get 5 tries on this one.
Bundles are your best option, probably. Like
Yeah,
50
for sure.
Yeah,
bucks
like
to get
he
5
like
practice accounts, but only 1 passes.
yeah, his deal, you just paid $20 for 5 accounts to try to pass, which is a great deal.
Once you pass though, you have to pay the well, it's around like $200, right, for the whole account. Then you get the account, and there's no occurring payments after that, right? So
Well, no, that's if you yeah. So usually, like when you pass the account, they have like a $80 a month fee usually. So you can waive that fee by paying a one-time fee, which is like $200. But they have waived it so that now when you buy the account, you can add on an extra little $10 fee, so that when you pass it, it's only $100.
yeah, I was kind of done with that. I didn't click the option.
Yeah,
It's all good though.
yeah, they have like little. They're called edge enhancers.
Yeah, so that's a one-time payment for the whole account. You get the whole account for that payment.
Yeah, exactly.
That's really cool.
And you can pretty much pay for that anyway with the earnings from the account. So,
Mhm.
so it's kind of a
Yeah,
win-win.
this might speed up my timeline quite a bit since it's less risk, meaning I can go faster. I can learn less and lose less.
I wouldn't have that mindset. To be fair, though, like faster, faster. You know, definitely take your time for sure. I had that mindset
Yeah,
at one
no, I
point,
hear.
and it just doesn't go
One of the
anywhere. It
key
really
things
doesn't.
in trading is patience, man, and that
It
was
really
one
Mhm.
of
is.
the things for a while now that I'm struggling with, and I'm still working on it. But yeah,
Yeah, that's the thing
Yeah,
with trading.
it's
I
pretty
think
light.
it's difficult to have everything on a schedule. Like that is one thing. Like to plan everything out.
schedules
Like
kill me in trading, man.
yeah, like
They make me
having a
miss some
financial
trades.
like a numerical profit target. It is one of the most like that's a side thing, but I know we're not even talking about that. But having a numerical profit target only holds you back, I think, because once you get it there, you stop. No matter how good the trades are for the rest of the day, you've hit your target and you're done. I'm never like that. Like I don't like to check how much profit I'm making because I'll stop because it's always more than I think that I need in life, and like I'm not greedy, so it makes me overwhelmed. What's up?
I'm kind of that way when I'm learning something or when like I'm playing sports or something. If I get a glimpse of how far I've come or how well I'm doing, I kind of am a ball dropper, and
Mm.
so I'll like drop the ball, and coaches will be like, Dave, or that's my name, Dave. Be like, what? You used to be able to do this. What's going on? And it's just because I dropped the ball because I got in my own head thinking I was done. You're never done learning.
Yeah.
I think that's what I'll do though once I've passed the PA for sure. I mean, I kind of need to see how much I'm making right now just to budget the account so I don't lose an X amount and I have to make an X amount, right?
Hmm.
But once I pass that account, I think I'll definitely turn that profit off for sure.
Yeah, well, it's like if you know you've taken it up from here to here, right? And you've taken it down from here to here and up from here to here. I mean, like, you're doing it well. You don't have to check if you're losing, right? And I'm like, well, I know that if I check, I might just stop trading or I might not be inclined to continue trading because I feel satisfied with the amount of money I've made. And
Sure, sure.
Yo, that's legendary though.
I mean,
yeah,
there's nothing wrong with checking your account after a month and you're like, holy shit, you know?
yeah. Well, the
It's
thing,
motivation too.
it can get to your head too though, like when you do, sometimes when you, like, if you've lost a lot of money or you're having a really bad day, the two words fuck it, they can come to your mind really easy, and it's like, oh, just like, people think like, oh, fuck it, and then it becomes you start to like get reckless, right? Because it's already so bad. But when it becomes very good, you can also have that same problem. People get sloppy when you're doing really good, just like what you're saying. I've had that too before, like literally, like the better that you do, the more focused you have to be, because I'm like, all of these things, when you're doing well and you're focusing on your trade, you're thinking about the profit and loss. Everything that you thought of to make that profit and loss is now irrelevant, and all you're thinking about is profit and loss. And I'm like, well, that's a waste of time, really. Like, we need to keep thinking about the things that got us into the trade, the things that keep us in the trade, the things that get us to the target, and the things that obstruct us from the target, and all of the little things that matter about the trade, not how it affects us, because that just make what we do like, it's so human. I've taken an introspective look at this, and people look at the profit and loss, and they sit there for like a millisecond and just wait for the feeling. How does it make you feel? And then they wait for it, and then they try to say, oh, whenever you get that good profit and loss, you're trying to find a higher number because you feel more, and you get attached to this feeling, so you check it all the time. And I'm like, oh man, it's a vice. It's a vice. Because it's never going to help you make a trade. Knowing how much you're up on the day, it never will tell you where to get in. It'll never tell you where to sell. It'll just make you crumble under the weight of your own profit. And I'm like, never again. Like, don't take 10 years to learn that or something. You know what I mean? It's not necessary, because when you get into the trade, you have a target. It's all about getting to that target. And when you check the profit and loss, you might think, damn, I'm fine by here. I couldn't imagine losing halfway to the target, and then you sell it because you're happy with $3,000, and then it gets to the target and it would have been 6. I'm like, oh geez. Now you really rethink everything, and say that happens 10 times over. Now you're like, damn, I should really just focus on the profit target, not the actual profit itself.
Hey, quick question. I've got head and shoulders drawn over these three peaks here at the end of the graph. Is that sort of a right idea here? Because it did suggest maybe we go down a little bit. I don't.
Oh, yeah. So this is really interesting because we've done something super similar up here. Like it even had like the first extra left shoulder, and then it went left shoulder, head, and then right shoulder, and came all the way down. One thing that I want to point out with it though is this was like a choppy, difficult to, you know, really move area, and then we blew out of it, and the entire move came back to where we started blowing out of it, right? So that just tells me right there, like I interpret that as that the market does not respect the people that got excited about the big move. It was like, oh, you didn't find value when it was chopping and slow, and you didn't think that it was going to go up and do this. And then anybody that allowed or that got a position and anticipated this move is allowed to keep it. But anybody that was late, how did the market treat them? It made them into sellers or losers. And that's tough. Why would it do that to them if it respected them so much? You know? And I'm like it's interesting to think of like that. But this is a head and shoulders. I see it similar to this one, except I do think that it's gonna work differently. I think that this line is going to be one that breaks soon. I think it's trying to kind of like lead people on a little bit here because ultimately I think we're getting up today. You know, the day started out with a big dump, right? First thing I said about the day was that I think it's going to go up, and then it started dumping. Basically, it offered the B points and so on as soon as it dumped, and an entry to get in. But basically, it made it really difficult for anybody that was exposed from yesterday to continue holding long through to today, which is fine. But at the end of the day, um, I do think that these earnings they could be the pinnacle of reversal on the index for crying out loud. So it matters to me. You know, we could get a multi-day reversal on the Nasdaq index from AMD's earnings because it's not because of AMD's earnings itself, but they're definitely going to help, I think. I think that if there was no earnings, we'd be interested in reversing, and AMD could kick them in the ass and actually make them reverse. So I think that returning back to the middle area for Apple earnings is going to be what we're going to be interested in. I don't think it's going to be low like this for Apple's earnings. I think people are going to be more indecisive. What's up?
We actually have a long-term trend right there as well. They just tested as well. You know where your trend line is just below the long-term one.
Yeah, yeah.
The yellow orange one. Mine's a little bit higher actually.
Like to this one.
No, but for the very high. Or should I say the second high?
Oh, like that.
Yeah, around there. Yeah, yeah. It literally just yeah. I actually took a screenshot of it in the exclusive.
Oh, the red yellow. Or yeah, yeah, yeah.
Long-term red yellow. Yeah, it's on the hourly.
Oh, okay, okay. So it's not this line. It's a different line altogether. But I can see that it does cut through there. Interesting.
Yeah, yeah. I was thinking, like, there's no way we're getting through that just yet. You know, we're definitely gonna hover around there for a bit.
Yeah. Yeah, I call this one a nod. What's up?
I was just gonna say it's where your blue dash line is as well, pretty much.
Ah, yeah, yeah. That's the high of the node there. I think we're trying to rival that.
Do you have a link for that how to set up your tools video that you made, John?
Yeah.
I went and looked at your catalog on YouTube last night. And
Oh, no, no, no. It's not on YouTube. You got to look in the actual Discord. Because they're all private links for members only.
Ooh, I feel so special.
Yeah.
That was serious though. I do feel special.
Obviously, being in here, man, for sure.
I somebody said it before. I lucked into meeting John, so I'm gonna take advantage.
It's a gem being in here, honestly, dude.
I like the community that's growing up here too, because I know that you used to have a bunch of different people in it, but I don't know. I'm starting to like being in here every day.
Yeah,
A
yeah.
lot of chill people there.
Yeah,
Sure.
Randy's on holiday right now. If anyone was wondering where he is too, he's usually in here every day. Yeah.
He had to contact Lilu, didn't he? I think.
Oh yeah. If you have a lifetime account only, you have to. Because if you're paying their monthly fee, I'll be damned if they cut it on you. That'd be stupid. Why would they? Why would they not accept your money? I'm like, what?
If you're away, then
Yeah, but if you're not on a PA, if you're not on a sorry on a on a lifetime, you're just paying their monthly fee. I'd be damned if they took your account from you. That'd be stupid.
it's like they probably want their commissions.
Yeah, I think they still have to pay fees on your account when you have a lifetime. That's why they want you to trade on it.
And don't they match trade your account too? If
I'm
you
sure they do.
percentages up there, yeah.
I got it. Unfortunately, I gotta go work, which kind of sucks.
All right, man. Well, we'll catch you in a bit.
I'll catch you guys. Yeah, catch you guys later on. Take it easy.
Sounds good, man. Yeah, yesterday I was having one of those days where it was like anybody asked me to do anything, I was like, no, fuck off. I just did not feel like it. I
Yeah,
don't care what it was yesterday. I didn't want to do it.
like at work.
Oh, in general, I woke up and my wife's like, "How'd you sleep?" I'm like, "No, leave me alone." So going to work was just a little extra. Yeah, I was just like, "Don't fucking tell me to do nothing."
Did you
Most
make
of it.
minus? Did you lose something yesterday or what? What
No,
happened?
no, I just woke up and that's just how I felt. I felt like I needed like an
Savage.
extra week vacation for myself or something.
Yeah, sometimes I have like I wake up like that, and it's because I have like a really traumatic dream and I can't remember it, but I still feel like I've just went through a crazy event, like a terrible, like horrific event, like must have been a nightmare, but I can't remember.
That happens to me too.
Yeah, and it's like I
I'll
wake
start
up like
sleeping, then I'll get really crazy dreams, but I don't really dream right now.
yeah, I've stopped as well. Every now and again, I have one, but I don't know why. I try to think. I'm like, what did I do differently that day?
It's strange. When you were young, you could always remember, and now it
Yeah,
gets less and less.
it's true. Yeah.
So, John, I have an interesting question.
Yeah. What's up?
So, how do you have um, days where you lose a lot, and how do you handle these days? You know?
Well, yeah, like it depends. Like I keep it relatively tight stops. Like I don't let the positions run away. So and make it really easy to manage in the event that it does start to go south. But at the end of the day, you know, I don't get deterred from the environment very easily. Like it doesn't. I continue trading until I fix it. Basically, usually the market will if it dies out, I'll stop trading. But usually the entire day is full of different opportunities. And if I take a long term larger uh, hit, I'll start shaving it back on the short term. Like I don't care how like how big of a hit it is. I will literally sit there and work my way out of it. Like short term, uh, like by taking very small trades. And it's like you would think that it wouldn't be worth it to take the small trades uh, to get it back, but I will take the time to do it. So it just basically
Yeah,
I just focus yeah, like if it's a big hit, I'll make it back slowly over
you don't
small
rush
trades.
it.
No, I definitely don't rush it yet. The first thing that
Yeah,
I think is patience, yeah.
this could be a problem for me because I think I would be stressed, you know. It's a lot of pressure that if you lose because like you said, like you lose, for example, now 1,000 is for me personally now good money, you know.
Mhm.
So if I would now lose 1K, I would be like fuck, and then I put more money in, you know,
Yeah,
and
no,
then stop
see
it, and then after I lose 5K, I'm like fuck, devastated.
yeah, exactly.
You
And
keep your
that's
trading money separate from your the money that you need, I guess.
yeah. Yeah, the major thing as well is like I think that that's a really common process for a lot of people, like to go through that cycle. So I think it's important to make sure that you always have control. I think that's really important to have control of everything that you're doing, and basically I think a great place to start, like we said before, is that Lilu thing. So you can't, lose $1,000 right off the bat. You can only lose 20 or 100 or whatever. And to be
I
honest,
think for me right now it's not worth it. I just was wondering how you handle it, but I
yeah.
think I need a year like Source Connect. He said 1.5 years. I think he's in this group.
Mhm.
I
Mhm.
think I'm a need 1 year to um
Yep.
or what do you recommend after?
Well, that's the
If I
thing. It's like you will know like when you're ready, and it's like there's no I can't really say a time limit because it depends on how
every
much.
person is different, yeah.
Yeah, like how much time, even if you're there every single day from 9:30 to 4, like obviously it's going to be more impactful, but and it's like if everybody if the group like continues to grow, like I can do more. I will do more. So I could do a lot more. So it's just I what I have to do, it kills me when I do all that I can and I believe that it's great and it only goes to like 10 people. I'm like it's brutal. So I'm like I don't want that. And I'd like for it to get out more, and I think it will. It's growing faster and faster and faster. So it's like every day we just have to keep hammering at it, and the group will grow, and I'm basically out there a little bit more now than I was so we'll see how it goes, and I'll make a video soon. I just have to find the energy.
I see. Yeah, it's devastating to upload something and then just 10 people watch it, I guess.
Yeah, because
But
I can make quality like the video that I made and sent you. Like I have a lot of videos like that. They're just not available to the public or nothing.
okay, yeah. How do I get them? Like
Yeah, I
I
can
I want
I can I can
to
send you a link here.
damn. Thank you so much. Yeah. No, it's tough, but I sent you the video on this trading girl. I don't know if you checked it out.
Yeah, I did. I
She
did. I saw that
yeah
yesterday. I checked it out. Yeah. Yeah, I'll have
yeah
to I'll have to look into making some adjustments and stuff like that.
yeah. I think she makes a lot of money just with courses. I think you can do it too then, of
Mhm.
course. But yeah,
Yeah,
it's
because
just your
at
strategy.
at the end of the day, like what I want to do is basically just get to that like satisfactory number, and then I'm gonna lock it down. Like I want to make it Legatus private trading group, like not I don't want just anybody, right? I want good people, and it's like right now it's like it's tough because like there's barely any people, so I'm like at the end
Yeah,
of
I
the day,
understand.
yeah, at the end of the day, it's gonna be a process. And like it's interesting because people seem to want that like marketing, like and stuff like that. They want that like like that person talking in front of you and stuff like that. And I'm like, you know what? Like that means that there's screen space data that I literally consider myself. You'd rather my head be floating in front of it? I'm like, come on, doesn't make any sense. But
Yeah, I understand. And the thing is, I don't want to insult you or something, but the thing is, I can't be every day on this call
oh
with
yeah,
you
no, I
guys
know, I know. Not many people
because I
can. Yeah.
yeah I took vacation right now, so I
Oh
can't
wow.
join
Okay.
this call actually
Nice.
until Wednesday. But yeah, I'm
Another
gonna just be in the evening. I'm just on going on after work immediately to join.
So funny enough, like if again when the group grows to significant amount, I'm willing to trade after hours as well. Like I do trade after hours almost every single day. Like, but the market is moving really slowly, and I'm like passively doing something else while I'm monitoring that because usually I have trades going from the previous session essentially, and I have to keep an eye on them. And
Wow, I thought that's crazy. I thought just institutional investors can do that.
No, so we like the market only closes for 1 hour every single day for us, and that's from 4 to 5, or sorry, from 5 to 6. It closes 6 p.m. every single day Eastern. I was trying to think about there's gonna be a time difference for you, but like even on TradingView, like when you open up TradingView, if it like, and this goes for anybody that's on a different time zone, I would just make the TradingView chart time New York time. So if you ever hear me say, "Oh, something's coming out at 2 o'clock," then you know exactly when that's gonna be. You don't have to like go into Google and check, you know, what New York time is and everything like that, because even a lot of people in the states that are in here are on different time zones too from New York, and it's good to make sure that you can always easily check it.
Yeah, cool. I'm gonna check. Check that.
Yeah, because you can easily just click the time and change it to Toronto or New York, and uh and then it avoids that confusion. But yeah, no, the market is open all night long here, and sometimes there's some pretty decent movements overnight. But most of the time it's pretty flat, and that can change in the future though. But it's not like there's not opportunities overnight. The cool thing about the overnight opportunities is, you don't have to take much risk with them. There's not a lot of movement, and there's not a lot of size in that movement. So really, like if you take small size, it's not very likely to, move against you very largely. Like, and when you do get stopped out, it's not likely to be by much. So that's another major thing. Obviously, as well, on the flip side, it doesn't make much when you're right either, but it can.
So it's better for beginners, right? Maybe.
Well, it can be. Like when it's really slow, it can test your patience. Like if it's moving like this, like I wouldn't say that it's necessarily good for anyone. Like
True.
it's kind of terrible. But if it's moving, then it can be good. I think that it moves very slowly, and if the candlesticks are actually making patterns, then you can sometimes they're really clear patterns. They're just really small, and that's what I've noticed overnight. Like you can go from like one of those ranges, and it can be an M into a W like the whole way through with like some slight differences. And I mean the ranges like that are really easy to take advantage of. Here is very similar. Done up here in time. Wondering if we're close to the end of it. And having completed this movement before, was capable of making a move of this size. We did this rough movement again, and it was capable of making a move of this size. We can see that, making this large enough of a consolidation potentially could generate a move as large as the one that we had before. Intriguing. One thing about it is it's been very good about getting B points today. Every single B point that there ever has been today, it looks like it has hit. Um, you can look at these ones down here and think that there might be some down there on the very short term, and I suppose there are, but they are somewhat negligible. Now there are some levels like this one here that are going to start to become a little bit relevant. I like that one because it's not because it's just a B point, because it puts a what is it? It identifies the low of this node, and that's really where the volume begins. Testing that maybe with the same kind of spike that we did out of the top, it would be pretty normal. And it looks like we kind of have that going on there. Like this spike that we had right here, roughly the same size spike that we have going on the bottom of the. Just an observation, but what it means is like this area up at the top here, we could really see that it starts to cascade in the volume there, and that literally could be like our red zone, and we have down here could have been like our green zone to this area where it found it so easy to make a consolidation. And I mean, it hasn't really went back and forth much while it was making this node here, but now as a result of it making that node, it has presented an area that otherwise is the extreme high and the extreme low, and we're outside of it, obviously. Like, I'll tell you one thing, it's right in the middle. So there's a lot of maybes in the middle, is what I've come to say. You know, a lot of maybes in the middle, and that's just it's it's not really a good place to be positioned from. So it's a good place to employ patience. And an understanding would be that we are subject to making a spike back to this level. Okay? That's okay. At the end of the day. The more comfortable one is with it, the more easy you could find yourself a part of it. But I find it extremely high risk as it is in the middle, and it does not have to treat people very well whatsoever. But if you did take it, this is the target. So, you know, by any means, like, only those that are comfortable with that kind of movement, I would say could take it. But it's not it's not the best trade in the world, I don't think. It's a very risky one. So not much size would want to be taken on trades like that, of course. And you know, you must already have a cushion kind of thing to work with that, like a little bit of money already made to justify being able to take a risk like that. Especially when it's like notorious to getting to the 61, it's like buying at the 50. You know, you gotta have some guts to do that, right? But one thing that was a major suggestion was the fact that this is like a red zone and green zone, and I do believe that everything we've done outside the ranges have always been wicks and spikes. You know, it has left it as quickly or sorry, it's come back to it as quickly as it left it. Like when we dropped out, it came back, a spike, dropped out, it came back and made a spike. Same thing happened on the highs. So what it's saying is it's comfortable inside of this area. This is the comfort zone. And everything it does outside of it, it's like, oh my goodness, let's get back inside. You know, it's like it's cold outside, you know, has to come back in. And it essentially does every single time. It instantly just turns around and shuts the door. It's like instantly comes right back into the range, into the comfortable area, into the area where everybody seems to be trading. And I'll tell you one thing, this has never been the best price for anybody at any time. It's always a crappy price. So I'm like, why do so many people trade in there? But I mean, like, all the people that just go to the bank and they're like, I want some Apple. They don't even look at the chart. They just buy it. Where do you think they're gonna land? Well, probably in this area up here. So like all the people that just buy randomly, like people at the bank that just put $100 a month in or something, or $1,000 a month or whatever it is, and they just automatically buy. You know, they're probably gonna land in the big area, like this big node, because think about how much time it spends outside of it. Not very much. And it's very unlikely that they'll land on areas that are um, uh, not in the big node. So it's intriguing. I do believe that we're gonna go and see that level. Like, what about moving this back here and saying, all right, let's say we had a range that goes even farther back. Maybe it does exist some other time. Maybe we've been here before and used this before. Huh. You know, kind of. I mean, it started off with these two highs, and they were making this green zone. When we made the red zone, we did a little bit of a response here, which I like because it responded to it from above and then came back and tested it from under. And then we did the same thing on the green bar, tested it twice there as well. A little bit of action on both sides originally. Okay, it didn't manage to make equal distance on both sides. Definitely got some responses here though. Here we are today. Like I came up with this range today, and we can find that it's being, it's not the first rodeo with this area. Basically, we've been here. This is probably one of the most common areas. Like if you think about it, let's take a look at this volume, the whole picture. So like this entire area right here, and the volume that it has. This is how it's spread out. Out of all of the volume that we can see on this picture right here, I'm not really looking at the candlesticks, I'm looking at the volume. And I can see that that red line right there, that is the level that has the most volume out of any level. So what I'll do with that level real quick, just to keep it in our picture, is I'll make it a red line. Because when we zoom in, it'll show us a different node as the high volume node right there. So we can see that we came down to snipe that node a minute ago. And that was the big picture, highest volume area price level than any other level. So it's pretty significant. And now I think that the relationship with this line is coming to an end. And there is some sort of triangulation going on. I can't help but notice this kind of pattern again. However, it's not positioned low. The other one was down and it was at the bottom. This one is nowhere near the bottom. Curious to see what it does for the people. One thing that we haven't seen, we've seen spikes out of the bottom here, spikes out of the bottom here, spikes out of the bottom here, and I'm like, well, we've seen this spike out of the top. And where did we come from? Well, we came from spikes out of the top. This distance, maybe seeing it again, really. This spike out of the top, curious about it. Because, my idea with that spike there is that it's potentially trying to be even with it.
Like, how do you know that exactly this spike? This is so I can't understand. Damn.
Oh, because I was trading here yesterday, I remembered that we were up yesterday and that we spiked towards this level. Because this level, it was related to this level right here. And I was looking at it to come,
Nuts.
yeah. And also yesterday I was looking, I wanted it to do that, which I thought was kind of remarkable because when it was in here, I drew this picture and then it
Yeah, I
played out
remember that.
like
I
that.
remember that.
Yeah. Yeah, so that was kind of neat too because it didn't do any part of this pattern. It wasn't like it was here or anything. Like it did every single part as it should and even kept the consolidations low and then high. Like roughly this second consolidation is higher than this one. And that was the idea. Like this one was below the red zone, this one was above it kind of thing. So that's okay. And that level up there, it still technically has never been hit. So I'm like, well, I'm not going to disregard it. It literally can still lead to that spot in the future. And I think that it wants to, ironically. Well, it wants to get to it more than it wants to lead to that spot, I think. So I'm more interested in getting to it than getting back down to that spot. But like the plan, it's like any trade that you get while we're underneath that area, if you take it up to this point, you can actually take a trade against it, right? So instead of selling this position out, what you can do is take a trade against it. And if it comes down, that's great. Worst case scenario, it blows through the high and you keep this. You take a small loss on a different stock, but because you keep this, you don't have to find another entry. You don't have to worry about getting in again. Like let's say for instance, if it makes a big dump, that's like half the position. So people usually they buy in here and then they sell up here, and then they try to find a way back in the middle. And I mean, it doesn't treat them very well usually. Usually, it 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 treats them like crap trying to buy back in the middle. And like what it'll do usually is it'll be like this, and then it'll go, and I'm like, well, that's unnecessary if you can hold from here and just trade back to this point right here. A different security entirely. Back to that location. And it's like, you know, the other indexes do generally move the same way, but sometimes they have their own method of movement. Like in the morning, you can see that this is the SPY, the US 500, and it made generally the same moves that we have today. And this is the Dow Jones, and it made the same kind of movement. See, this line right here, typically I would readjust it to the high, but I think that what we're doing right now is more like a symmetrical triangle, taking out of both sides of its tip than something that's not really interested in that line. Like I think that this line, it's been used like how I would make a blue and yellow line. Like it's not really your ordinary trend break, but on the first time that it broke, I didn't readjust it to here, and I didn't readjust it to here, I didn't readjust it to here, I didn't readjust it to there, but instead I kept it. And it was just used with absolute precision there. But I think that we'll see it again from the underside, testing it from the underside, which is fine. I mean, hardly a movement, but it's like it would be interesting if it didn't happen because this is what it's supposed to do, in my opinion. And at the end of the day, it's more like you're just checking if it's in line with the movement that it typically would make, and it seems that it is. And what that shows is the control of the institutions, because it's not, it's likely not going to be in the inclination of the public. So it shows that we're getting closer to them having that full control again. And what I think that'll look like is actually a run in line with AMD. You can see everything that they did in the morning amounted to a run right back to where they started. Here's that symmetrical triangle from yesterday. It's intriguing to me because you can see that on AMD itself, like if I take this movement here, you can see that this is the entire area that it had all that volume, right? And what do we have outside of it? It's like a um, very clear distance out of the bottom and the top, very similar, not exactly, but very similar, and very similar in the time that it took to make it as well. And I can also see that it's very similar in the volume that it had. And it barely had any volume when it was doing these areas. If I take this away, it doesn't really change it actually. But essentially what that means is, you know, the majority of the volume has been contained within this area, and we've had wicks and spikes only out of the top and the bottom. You can even see the first spike out of the bottom actually was very similar to the next one. So it's not like it doesn't do that. And then we have another one here, which is similar to this one. And I'm like, okay. When I look at that, what that tells me is that it has been expanding. Something that we've been seeing a lot of on the Nasdaq index lately. I can't draw a straight line, but you know, it's essentially expanding, and it is moving very much like the market. And I only mention this company because it is very much the company of the day, I'd say, with the earnings report at the end of the day. And I think that they're positioned to actually go up pretty decently. I'd like to see them get to this point. But of course, I don't have any idea of the slightest how their earnings report will look. I don't know anything about it, so It's going to be moving heavily though, and the technicals insinuate that it's building for a push. So we shall see. And what that would mean, if you're interested in getting exposure in that kind of environment, if you take a long trade, like if you take a long trade down here, if you took the morning's long trade or even anything after, um, let's say for instance you've managed to take some off as it gets to the target, because obviously we had targets up here, so you secure at least one contract at the target, right? And if you choose to let any run, then whatever you took off at that contract at that target, which is 100 points, is locked in, right? If it doesn't matter if you have like if you took 10 at the bottom and you took one of them off here, if the other ones go back to 1 point profit and you sell it, that means you're literally going to be locked in with 100 points no matter what on one contract. Now, let's say you took three and you took one off there and you took another one off somewhere along the way and you're left with one. That's fine as well, because you can keep your stop at the extreme, and whatever you've taken off along the way is literally what you're going to be paid. The last contract is exposure, and it's not meant to be watched on the profit and loss, but just understand that if you get taken out at the extreme, then it's essentially our job again to find that exposure. But until that gets hit, we basically don't touch that position, and it's our job to find a position against it. And in the event that that position against it overtakes this one, we'll have to find it back again. Because I do think that by the end of the day, I find more value in being positioned long than short. So it's worth fighting for that. And let's say, for instance, if you are in from down here, one thing that you can do after you've taken some off is you can drag your stop into profit. So let's say you bought here, and it's managed to go up this much. You can take your stop loss and put it above your average price if you wanted to. And that means that if you're in from here, you know, this might only be like $20 or something like that, you know, but that's at least, if it comes down hard, you will make that $20 no matter what. And at the end of the day, that's one way to do it, putting your stop in profit. But let's say if you've taken off a bunch along the way, it's safest to keep your stop at the extreme, even if you're in from here. You know that this small movement is not worth as much profit as you've just taken off. So if you can afford to lose this amount of the big profit that you've just made, then you'll be left with this if it manages to get to the extreme. Now, that's fine when you've got your long trade and it's all set up like this, and essentially, now you put that on the back burner and start focusing on trading against it. And that's the name of the game in an environment like this. Because if you can manage to grab that low and keep the stop in profit, and then if it manages to run up into a high like up here, and you manage to catch it back down, and you can get your stop in profit on that as well. The report happens in the middle, and if it blows up, then you're going to be in from here. If it blows down, then you're going to be in from here. At the end of the day, both positions are stop and profit, and there's no better way to have it for the end of the day today. Because it means you will be exposed to whatever large direction that it decides to move. Even if you have 10 on the bottom, the value of 10 on the bottom, and 5 on the top. At the end of the day, the most important thing is to make sure that you have positions that are protected by a stop that is profitable. Because at the end of the day, even if you have one position and it is protected by a stop that is profitable, there's a 50% chance that you'll be in on the big directional move, if there is one. So it's another major consideration. Another thing is there's been drastic movements on the earnings in the wrong direction, like Tesla, for instance. They shot up on their earnings and convinced everybody that they were going up, but we knew that they were destined to come down. I could make a video on that actually. It was very clear. But let's see. And like, cause I have every single day recorded. It is recording every single day, and that's because if anybody wants to go over a day, it's all there, and all remembered, all recorded.
Damn, John, do you never eat? Make never break?
Yeah, I do. Yeah. But I definitely don't find excuses for me to stop. That's one thing that I noticed. Even on the trading floor, a lot of people try to. There's like a culture around. I don't like to work, and as soon as I get done work early, that's great. Hey, I finished work early today. You know, you never hear me say that. And if it is, it's because something tragic happened and I had to leave for it, and never because I'm going to slack off. That's for sure. I'm old school though, and I guess you could say I'm pretty strict with myself, but I guess you could say that's discipline at the end of the day though, and it's
That is
required.
discipline. That is insane.
Yeah.
I'm gonna make some food, but I'm staying in the car. I'm
Yeah,
listening.
yeah, yeah, for sure, for sure, for sure. Yeah, it's weird with me. I literally when I eat halfway through the day, I literally get so tired. After I've been thinking and thinking and thinking in the morning, I'll have like if I have like a big meal, I'm like, "Oh my God, I can't even think anymore. I can't even I just like get those that like I have to have another coffee or something." But coffee keeps me going. I do. I kind of just started drinking it like not too long ago. But I used to think that the entire day was like a long period of time, and now like I keep my mind active the entire day from 9 to 4 even on a slow day. So like it's not like overwhelming for me, or it doesn't take up too much energy for me to do the whole day or anything like that, and I've become used to it, so that you know, some days, I mean, I'm like I could even do another day again if I could, but the market just slows down at the close, which is brutal. Except for days like today, there's going to be movement into the close. I don't know what time AMD actually releases. Let's see what time they do. Hopefully, it's not like 4:30 or something like Apple. I don't think it is though. We'll check. Here we got the calendar there. AMD is at 4:15. Okay, so it's not too far after the close. Few other strange ones. Nothing too like Yum Brands.
Yum Brands, KFC.
I think so. Yeah. I don't know. Yum China Holdings. I don't know if that's the same one. I don't think so actually. Is it all?
Yeah, something like that owns Kentucky Fried Chicken right now, right?
Yeah, I thought that was like three something. I can't remember. I've been
Oh yeah.
spacing out. I don't even know. KFC. I feel like they're like a money laundering company secretly, or like some crooked organization.
Yeah. Yum Brands Inc. is Taco Bell, Pizza Hut, and KFC.
Oh yeah, Pizza Hut. Pizza Hut. It's like I don't know how they're even in business. They literally have empty stores everywhere, and I'm like,
I see Pizza Hut buildings as other things.
yeah, 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 exactly. And I'm like, it's suspicious that they are still in business.
I think it's their loss leader, right?
Yeah, I think maybe I don't know. I think that it's like a front for money laundering. Personally, I don't know how
You
they've
might be
stayed.
right.
I don't I don't know how they stayed in business. I think it's all just some weird cover up. Cause I swear every time I look, I try to find the people in there now. I'm looking. I don't know why they even have tables, because nobody's using them.
Random
John,
thing.
investigator.
So before 2010, the largest buyer of kale was Pizza Hut for their salad bar, and they used it to top the ice, not even eat it.
Oh wow.
just a weird thing. The world's largest buyer of kale was Pizza Hut for 10 years or so.
Yeah.
It's useless information, I know.
So we've pretty much ended the relationship with this blue and yellow line there. It looks like we're back into the green zone again after many attempts. And I suppose there is a line up here that we can consider. It's about to respond to it. And I can see that we've put a node on the top of the green zone and also one on the bottom. POC. So it's interesting that they came down to this other POC that I have here. And, this is like the long-term POC. And they can't get through it. Like this. Focus is getting on the gold, getting to the gold bar above. A hedge target. The idea is to keep the long trade from the inverse head and shoulders at the low and hedge against for AMD earnings at 415 today. And I'm like, what is this move here? Is this move right here the distance to get to the gold bar from the other side? Oh, it's a little bit more. But I'm feeling it.
Nice. It did not come get me.
Nice.
Means my initial trade was in a good enough spot to be left alone.
Yes. Excellent. This is also kind of like tempting to readjust to look a little more symmetrical. I love how every trend broke. Like every single one of the trends broke in the opposite direction of the way that it was pointing, and that's what they're designed to do. Because a trend break effectively can invite a new trend entirely in the next opposite direction. And levels like this, I know they might seem like clutter, but I'm just gonna turn them down because like I know they're not really relevant right now. This one's completely relevant. Turn it down. In the event that we respond to them again, they still could hold some value, but this one we readjust. This line actually might work a little bit like how this one did. Curious about it actually. Like another blue yellow line. Of course, we went red zone to green zone. This kind of movement right here could potentially be in for that. A smaller version of the entire day. Because the name of the game now is to leave the node. And I mean, one thing about this node is it's never really had a relationship with back and forth between the red zone and green zone. But this time it went from green to red back to green. And it's done this before here. And like even this entire move where we have this right here and it goes like that, right? I see that here. Very similarly. So we are capable of making movements like that and staying in movements like that. But one thing I'm saying as well is that could be the movement that we like to make while we're in this trend. When this trend's over, I mean that could end. And like it seems to be a thing, like not a single time that has it done this without touching this area. It's all associated with this area. And I mean leaving this area, we could be done with that. That's another thing. And this is phase A too, you know. Like if we take a look at like a Wyckoff, you know, phase A is accurate. Sorry, this one.
Oh, your screen's paused. Oh, there it is. Okay.
That one, and it's my screen pause now.
May just take a second to load.
Well, it's
Yeah, you're good. You're good.
like what about now if I click away?
Yeah, it's like I can't see what you're doing. I can see it now.
Oh, interesting. So it pauses. What I was going to show is the N wave. Sorry, so is it paused right now? Or what? Like, can you see the screen? Should be cool.
I can see it. Are you
Yeah,
doing anything with it?
no. Like I'm like typing on Discord, but it's still showing, right?
Yeah,
Like,
yeah.
oh, okay. I thought it was like going stream is paused while I'm doing this. I'm like, oh, that's a problem.
No, like the tape is still going.
Okay,
I
good,
just
good, good.
didn't see what you were doing or if you were
No,
moving
no,
or
no, no,
anything.
no, no, no. I was just posting a picture, typing something. Somebody messaged me about just kind of a weird one for sure, because I don't usually look at this one. Dibs on there. Yeah, wow. Okay. Level. Just break of this line. See, it's like, this is weird. It's like 0.00384 pips. I remember in England, tons of people trade this. I'm sure they still do. Dollar. Clean. So now we're doing a retest of the triangle. sometimes I've noticed that we can get an expansion outside of the triangle, like we had on the inside. Um, pretty really. Tomorrow there's an FOMC meeting. Pretty big. 2 p.m. Gonna be a big move tomorrow.
So is this coming down to 61% of, I guess 1030? So that
And
rise at 1045, are we retracing that down to 61%?
um, yeah, I think we're at the 50 of the entire move up, but if we look at this one here, we've done a little bit more than the 61. It looks like there,
Okay.
but this one right here is the 61 for the major move there, and we've hit it once before. And it's funny to me because the one that you're looking at there, actually, it's kind of like it spiked through it and is testing it from the underside. And we did that on this one here earlier, so it's kind of interesting.
Oh, okay.
It's got a new trend now too, across the highs. So it missed the B point right there. Still basically is open. It's like it's on its fourth wave. Little B points hit there, but insignificant. Like what they made here is very much like a Head and Shoulders, sort of like the inverse of what happened. It is subject to failing. After all, it's positioned badly. After all, we can see that this Head and Shoulders that formed here, it didn't do so well. It came back, and even consider this the right shoulder, and it didn't do so well either. So Decent movement on the break of the trend. The head and shoulders is failing as expected. Beautiful. Right back to the blue and yellow line, where profits can be taken and aspirations of it coming back to the test of levels. Tapping that first one right there real quick. I'd like to see it get on top of the red zone ultimately. Just allowing for it to hit the green dash lines is fine.
So something that I'm seeing here while we're enjoying this little run up, there's like an M followed by a jaggedy line and then another M. Is that a normal thing? Like I would draw an M and a circle and an M.
Yeah, like this one, and then this one.
Yeah.
Yeah. Definitely. It had that. Yep. Yep. This is a.
Is there anything that?
Well, I'd call this one an
Oh, sorry.
all-in-one. It's funny because it's like it starts with an M, and then it's like now if I take this pattern and move it over here, it's like that's a W. But if we
Oh,
go look at it like that, it's an M. So it's like
oh,
it's definitely got that all-in-one. But what were we gonna say?
oh, nothing. I'm just thinking my way through this stuff. And just seeing if I'm looking at this right. Like I had expected the little run up after the weird double MOM thing, but I don't know why I felt that way. Oh, that's fancy.
Yeah.
Yeah, I'm still trying to figure out why I'm making the decisions I'm making. You know, because sometimes it feels like there's no method, but there is a method, and we're following it. I just have a hard time figuring out why I see the things I see.
Yeah. Yeah, it's good to turn the curiosities into understandings.
Yeah.
Mm-hmm. This we could be interested in putting somewhere on the high of the range at some point. I can see that we're using this POC, and that's basically a level where we've went sideways and then done this giant S wave back to that level, met in the middle of the equilibrium, the tip of the triangle. These are moves that are insinuating that it's getting ready for leaving the range, and basically it reminds me of another one of these moves that we saw in the morning where this entire trend since we started this low, it's been interested in making consolidations that come back, and we can even see that happen here, except it's a little bit more unforgiving for the people that didn't catch the very low. It came even farther back, and the same kind of thing is going on to the people in this consolidation. They've had a giant retracement back. But even that same kind of movement, it's almost like it happened in reverse here. Got that going on both sides of the triangle. Yeah, like I said, ultimately I'd like to see it get on top of the red zone. But that blue and yellow line has definitely had a strong impact on the return back to the triangles line, because this line is from the triangle. And typically I make them purple because they're associated with that triangle. And it's good because you can tell in the future that that's a line that comes from a triangle. And that triangle, like I mentioned before, we could get that expansion when I drew that out there, and we're totally getting that kind of expansion that I was looking at earlier. I call it a bow tie. Essentially, it is a bow tie. And like this kind of move, usually what it does is it makes people think that, oh, I'm going long and it's come back for me and come back for me, and I keep trying and it's not working, so they give up. And then it moves. At the end of the day, people are in from the low. They're fine just to hold through every single one of these retracements. People that didn't catch the bottom get treated differently, though. You can see that. And doesn't necessarily mean you have to catch the bottom to have the same stop as the people with the bottom. And if you don't get stopped out until they do, you essentially have the same value of exposure that they do. So, I mean, at the end of the day, if you've taken this move up, this move up, this move up, and this move up, you have more profit than if you've just taken that move. So if you've taken all of these moves and you're in from here, you can still afford a stop at the bottom. I mean, technically, but at the end of the day, the best way to have done it is to just keep it from the bottom. And the inverse head and shoulders at the beginning of the day that got us back to the first original targets, got us back to the first original blue line target, and even the pullback to the 61, they all still hold. And of course, no stops are to be dragged within the red zone and green zone. Even if you took this move right here, where I was like, clearly I want to see it above the red zone, more than enough profit on this move right here to be able to take some off and secure your stop. But I'm pretty bullish. So we're on top of the red zone. This is the idea, you know, they're gonna put their money in the market, and they're building on yesterday. They just wanted to make sure that if they could create any sellers, you know, they could do it with all the people in the morning, and all of them, you know, got to see as soon as they turn on the computer that it dumped off, and then why is it all bought back up now? But not with these people though. It seems that it's chopped back on everyone that chased, and it moved back appropriately enough to be able to get enough people out. And you can see that because of their work that they've done, they've managed to stop people out so many times at this level, which is really interesting to me because they've grown that to become the heaviest volume node in the long term. And it prevented people from even getting in on the 61. You know, it didn't allow them to get in on the 61, and I like that because it shows that they're actually trying to prevent people from getting in. It's one step closer to proof that the institutions that move the market like this to try and get people out of the way for the end of the day. And the end of the day today is important. What they're doing right now, I would really expect them to be waiting for people to be shorting it so that we can stop them out and make them pay for the run to the yellow above. So it waits here and waits here for people to short it, and sideways movement can turn into blasting upwards movement, contrary to popular belief. That's not every time, but this time. created something similar to what it had here. Like the fake out like move leads back to the consolidation, becomes part of the consolidation. So I literally mentioned the last post that I made above the red zone. I think we will see the gold bar above after a fake out like move, perhaps a grind can lead to a run here. So keeping that long exposure is key. Like I said, had that little fake out, it broke the trend in question exactly on command. And that was after posted this, that, very interested in keeping the long exposure, because it may not only hold through today's event, but tomorrow's Fed meeting midday. We could find another hedge for it, make it even more on the exposure anyone chooses to keep from today. The objective is to keep the long exposure from the extreme. Finding a hedge with half the size of the core is a great idea for the upcoming events. I expect us to be through the red zone shortly, and then after the red zone, we got to that point, and then I was like, we can have a fake out, basically above the red zone now, fake out perhaps. The grind could lead to a run, contrary to popular belief. Like I said, people assume it to do the opposite, because it's like when we see that there's a trend break, they've just literally come from this trend right here breaking, they've come from this trend right here breaking, and then they come to this trend right here and it doesn't break for them. Instead, it just fakes them out. Every single person that was associated with it coming down again just got stopped out, just came to the high. So they are put in a really uncomfortable position where ultimately I think that they're going to be buyers. The people that have sold here, like the short sellers, they're essentially going to put buy stops right here. And then when our institutional friends put a little bit of volume in there, like a tiny bit of volume, like one of these little ones, it'll trigger all of their buy orders. And then they become the ones that are buying for us. And all the people that have accumulated at the bottom get to benefit from this. But a lot of people, they think because it's went down that it is bearish, and like people think, oh yeah, we're in a big downtrend, like this is the hourly, so they think it's bearish, which makes no sense, because when it's down, that's the best place to buy. No highs offer better profits for long trades than lows do. The lows are that, and all bearish patterns that are on the Google cheat sheet involve the price coming down so that you can buy it and then it going up. That's the Now we've made a small advancement again. Still part of the chop, part of the consolidation. The objective for the institutions, I wouldn't doubt, is to pull back not enough for stocks and options traders to take profit, but enough to make them potentially chase it. You know, if they make a really slow climb to the high and then make a really quick snap, oh, a lot of people will think it's over. Just because the quick harsh movement. And then what has it done to everyone that's ever thought that the quick harsh movement was the end? In this case, it's been very, 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 because it led them on by thinking, hey, the quick harsh movement's going to give you one of these. Now you try. What's it given them? Absolutely nothing. Yeah, they're starting to feel the squeeze now. coming to that point where the red zone is in the area again. Still hasn't managed to come back to it. You want to know what's interesting about that movement there? They managed to make a move back that didn't get to the red zone and then carried on to make a new high beyond it. Something we've never seen before. Must be getting really comfortable with leaving the area. Another big tester-like move to try and get people to chase it. They're just rounding more and more people up short so that they can stop them all out at once. And it's like anybody that they saw trying to go short in this area up here, they tried to grab out with that next move. I think they might be trying to convince them to chase.
Yeah, I was kind of playing around with that triangle too.
Might be muted, John.
Oh yeah, sorry, I was gonna put some trends in there too. For the extreme triangle. Yeah, they're trying to get to the top of the triangle. Like, still part of a consolidation. That basically, I think the consolidation leads to a run. It's part of a squeeze. They're waiting for a lot of people to be bearish in it. They're trying to convince people to short and making them fight for something. I don't think it's, but it's certainly not a matter of only going long and from this area. But if you're already in long, the name of the game is to find areas that you get hedges against that long trade. Keep that exposure going. Bottom. The ability to expand looks like it's coming to like both sides. I can see that on the bottom expansion, we were kind of trying to go up but not expand down as much. It's like it flattened out. Oh man, I just got deja vu with this movement right here from yesterday. Same kind of setup, to be honest, in a very rudimentary way. It's actually at the same level too. Weird to me. Could be doing it here. You know what? It's like it's already tried to do it here. Same components exist, undeniably. Sorry, the idea that we push through the top still doesn't change. I mean, that's the number one. I don't care what it does until then. I don't think it's going to be worth much. I think it's literally just trying to grind people out, make them short, try and make them into chasers. It's trying to make anybody that's long also give up their trade. And at the end of the day, fighting for a short trade while you have a long trade is the best way to go about today. It's the best positioning to have. So working towards that is the name of the game. It's like there's still plenty of time left in the day, right? So might be working a little bit more to find that hedge if you're, you can either pick between patience and persistence. At the end of the day, there's a time for patience and a time for persistence, of course, but you can be a little bit more aggressive sometimes and choose to try and keep that active exposure, that active management. And with the hedges, it's all about finding a short-term target and getting exposure to that short-term target. Each time that you get your stop and profit on a hedge, it's safe to continue the core. So the idea is essentially it's not a necessity to have a hedge, but the necessity is to keep the long exposure. And that means that you're going to be in for half of it, or sorry, not half of it, but there's a 50% chance you'll be in for the big move. And that means that essentially, once you've made it so that if you're long and you've taken off enough profit to pay yourself, and essentially you've taken off some contracts, and you've placed your stop at a profit, you're in a position where it's either some money or more money. Because you've already paid yourself, and whatever you have left is exposure to the earnings, and it's a safe position that has a stop placed at a profit, so it's not going to affect your account negatively. So if you choose to hold it, and in the event that you have that position locked in, you're good to go. The next thing is you never touch that. What you do is you open up another hedging instrument and you start focusing on getting the same situation in play for that. And basically you get your stop and profit having taken some off the hedge, and you just basically you can pick between moments of patience and moments of persistence, where you are patiently waiting for an opportunity to form itself so you can find a short-term trade against the long-term exposure. And as soon as you get that trade stop and profit, then there's nothing to be worried about because you will be exposed to whatever happens on the event, and both positions are safe with a stop and profit. There's no better way to be positioned. So why would one just strive to be exposed in one direction when it's not it's not the only option. It's the limited option. It's the individual way to do it. But what do you think the hedge funds are doing? Oh, God forbid they're hedging. You know they're hedging. Of course they're freaking hedging. You know, that's what they do. They name themselves after it. So, I mean, like, why is it so far and beyond an individual to put themselves in the same positioning that the hedge funds would? A safe position. Because they're not worried about which way it's going to go like every individual. I'm long, I'm short. They're both. You know, they're long from the 60s. They have exposure guaranteed in the upwards direction. Long term, short term, they take a derivatives trade against it to make sure that if it drops in the short term, they can profit on it. If not, then the assets continue making money and the hedge takes a small hit. But if you've got your stop and profit on the hedge, then how do you take a small hit? That's the interesting part. Look, we have a smaller view app in there too, which is fine. I can't help but notice that our expansion has come to an end with a contraction. Now, there's limited time before it all is forced to end by a trend break, which I think is going to be the top line again. It's like we might have one of those all-in-one MW patterns that we saw earlier in the morning happen in here. Except sometimes you get one like this. And I'm like, that's acceptable, ironically. And you know, so is this. You can see against all of the public, it pushes against them with force, and it's got them all herded up right here. As soon as we pass this high, we're going to see a large increase in volume, and that's everybody getting stopped out. It's not people buying at the worst price because they want to be long there. It's because they're losing on short trades. Because when they sell and they expect to be able to make money off of it going down and then buy it, their stop is also a buy when they get knocked out. And if you get 1,000 people to short it right here, and then they all turn into buyers because they're all losing money because they shorted it and they got knocked out of their positions in one big clump, if every single person from down here and even lower, you know, makes that happen, they don't have to pay for the continuation. These people that are fooled into shorting will pay for it. And you want to know what's funny too? Is think of it from an institutional perspective, okay? You've been accumulating since the 60s down here and everything like that. And then when uh, when you take a hedge, so when you're long and then when you take a hedge trade short against your position, and then you know you profited, you help it continue going up when every time you buy to get out of your hedge. And then when you get stopped out of your final position, that's also helping your core continue higher, so that the next time you find your hedge and you take it down, you repeat the same process while you're holding the long trade to the upside. And It means that every single time that it carries on with this and it moves down and you've caught it and everything like that, you don't have to find where to buy it in the middle when it's not even halfway and everyone's wondering about when it's going to go up again because you're still in. You've endured the pullback because you actually hedged it and made money while it was coming down and money while it was coming down. Even if it was with half of what you made here. So let's say, for instance, you're just making this much. Like so no, so basically what that means is every single time that you've made this hedge from all the way down here, if it's only worth half your position size, you don't really make that entire amount of money. You only make half, but that's an extra half that that the market would have to go down before your position becomes a loss. Every single time you make a trade against the position, it becomes one more reason that you should keep holding. And then you keep piling this amount of side money up because you keep hedging. And guess what? Next time it does come down, who can add to the core? Yeah, most powerful. At the end of the day, using the money that you're making to hedge, that's the money that they'll add to their assets and live off of. But the assets don't get sold because that means their control is relinquished, and the name of the game is to control as much as possible. So our trend line's breaking. So there is a move here, like that we've seen today. It goes like this. Like this move is slightly different. That kind of environment might come to an end as we leave this area and leave this range. Kind of doing the same thing. Very triangular again. Yeah, this is a giant story of the market demanding that people find a new entry because holding wasn't good enough unless you caught the very, 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 very extreme, or put your stop at the very, 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 very extreme. And then, like this low wasn't good enough, essentially. And then what that meant was, is anyone that caught the new one couldn't be a chaser, couldn't be a chaser, and even if they caught the pullback here, they couldn't be a chaser, and even here couldn't be a chaser. And then they found a way to get everybody out of the way. It took about 4 or 5 times, and then they formed this move, and everybody could be out of the way now till here. Now it's pretty much like anybody that is in, they're likely not going to be able to withstand a pullback to this point. That's why it's like the new baseline like we had here, where now all the people are hovering around a really crappy high, and they're exposed from literally the upper high of the day for it to go higher, and they have to come back and get them out, back and get them out, back and get them out, because they know that they can't hold the position for more than $200. So they certainly aren't interested in a price target like the institutions are, and they're not interested in letting people catch a lucky break for AMD earnings. It's like, what it tells me is that you can't be buying in on the excitement. You had to already want to find value in buying extreme dumps, extreme lows, and you must already want to be exposed long for the report. Because anybody that just buys luckily, they tend to get overlapped in one of these major movements. Because the times that, if you look at the times that aren't overlapped, like this area here hasn't been overlapped, this area here hasn't been overlapped, and now this area here hasn't been overlapped. And I'm like, everybody that was caught buying in that area, buying in that area was though. And all of these areas here, they were all overlapped. The market didn't respect those positions. What we're left with are these people here, and just these people on that quick movement right there, because everyone else was overlapped and accumulated. And then we're doing the same thing here, doing in this whole picture, trying to overlap every single one of the chasers to get them out of the way, because the market really doesn't want them in. And it respects people that are positioned well with intention and can be tested. And when you can be tested, then you have integrity, basically. That's the idea. But you got to really want to be in to get that gold bar. And that's what the market's telling me. And now we're going to come into an environment that's different, where people are going to start to assume that all of the blasts are going to get overlapped. I say that changes. I say that we start going into up then sideways. We don't continue doing the thing that it's been doing. We change it. And that's the thing. Nobody will expect that. So instead of making this move like this, and then having another one that goes down like that, and just making this kind of shape, we're gonna do this. Mark my words. No more friendly test of the nodes. Because now that it's high, we're going to get less and less and less people chasing it because they think they're late. And they are. Like, damn straight they're late. This is high a day. So, I mean, watch the institutions move right to the price target. One line that we could be interested in coming back to could be this blue one. Short-term movement, of course. It'll feel that one though. The gold bar was hit, of course, as you can see. I want to put a siege node on the gold bar, which is basically like we will put a node on this level. This level is otherwise designed to take us all the way back to the green zone. That's what it's designed to do. But I don't think it's going to do that. I think it fails ultimately. What does AMD do? They felt this high as well. Now it has 3 highs, okay? And it can come to this one at any given time, which is also the B point there too. So it means that at any given time we could make that pullback and all of these highs could be taken back just a little bit. But that's fine. This is an old chart with an old range. It's suggestive of being able to use a very large area in the event that we get into this node. And putting a siege node here, it's like, how do we make it through the green zone? Well, this would be an appropriate area to have a consolidation. Then we go into up then sideways. Like I say, in this, and I expect this, it doesn't have to change for me to anticipate the new environment. The thing we have seen over and over again starts to change, and not because it had to show us, but because it was expected. You know, most people, they expect the same thing to happen over and over again, and if they expect a different result, that's crazy. Well, I'll tell you, if it never changed, we'd still be doing the last thing that was working before it failed. But guess what? Everything came to an end, or we'd still be doing it. That's the irony. So it's about understanding how things begin, how things end, and how you can fit yourself to it all. And I think one of the best ways to do that right now is to be exposed to the upside and capture the movements against it. Of course, taking profit off at obvious levels, like clearly the market respected the gold line too, no? So that's a obvious place to consider taking some off. You know, you're targeting that level. After all, it was the target for quite some time. Yeah, this was the first post I made today. Still haven't hit the gold bar above, looking for that today. Didn't do it originally, but certainly the entire agenda of the market was to take everyone that was interested in buying and being part of that movement, turn them into sellers, and then making their price target. Getting there. Every single person was bought out to that point today, and that's a fact. Interestingly enough, somebody else had the same idea. They just wanted to develop a position big enough to be able to take to a point like that. And they used the public to do that. They create them into sellers by showing them a lot of red in the morning. Look what they did to AMD. They just bought everyone out. Interesting. Because you can't trade at those prices down there anymore. After all, you have to buy up here if you want to be in for AMD earnings now. That's terrible. So you had to find value in when it was down to be in. And that's the moral of the story. Now, we can see right now that on a normal pattern, right, we would get B points here. And we've even probably responded to levels that are otherwise uh, attractive. Like, look at this 188 200 right there. It sniped it, right? Why isn't it at the B point? Why did it choose the blue line to be so important? How many minutes have we been here? 5? That's a long time for this small of a move. So the blue line certainly holds some weight in this environment, I could say. Now, the reason why I haven't been taking off a lot of the lines and so on like that is because when the movements increase at the end of the day, you know, it might look like clutter to some people, but those are vital levels that when the market starts moving hundreds of points and it stretches and reaches to an old level, it doesn't matter if it's a symmetrical triangle level, That'll be really handy to have levels like that. I know they're not being used right now, but because they're not being used right now, I'm not looking at them right now. So it's good to make sure we focus on the right thing at the right time. Because like my area of focus is only so small, and it moves around constantly, but it doesn't comprehend the entire chart at one time, but individual things that comprise bigger idea. And certainly no stops are safe above these green dash lines. They are the targets to this pattern related to the 188-200, but all I see is so far um, a short-term move and a little bit of a struggle to get back to that level. I wonder what it's going to do to the people, because anybody that's tried to short this move so far has been turned into a buyer up to my target. That's the irony of that situation. Which is powerful. I respect the institutions and their intentions, and I can see that they are playing the game today, and they are long for sure. Or is it the public that all valued this level? It's like, what made them all show up with selling pressure at a level like this when this level is from yesterday? That means they would have had to keep analysis on from yesterday, and I know people just they like to keep everything from the same day usually, and usually the trend lines are all the same color, so they don't know what's coming in from a previous day or how it's related to the previous day. So it's a disadvantage. But the color coding is huge because I can tell you what every single trend line means and why it's colored that way, and exactly why what it represents, and what that can mean in in a particular environment, especially when we increase the volatility to a point where lines like this one could literally be used today. Lines like that one could be used on this event. That's how drastic this event could be, you know? Levels like this old range and so on and so forth. I'm sure we'll have plenty more levels by the end of the day, because I don't expect it to necessarily be releasing at an extreme high. However, I'm not going to complain if it is. But in the event that it does not allow us to get a hedge trade of satisfactory value and protect it with a stop and profit, it's it's going to be something of a short-term exposure on the moment of the earnings, because there could be a pop or a dip right at the moment of earnings, and it'll be good to make sure that we can have exposure to that kind of immediate movement in the event that we haven't captured a position. Now, very impressed with the blue line. It decided to be the one that it decided to use as support over the B points below. And we can see that in other patterns, exactly like this one before, you can see that pretty much every single W that we had today, even the ones from the very, very bottom, we came all the way back down to this point right here, right? And then even in the smaller ones here, we could see that they all came back down. Even this one here, like that one came all the way back down to test itself as a W. And then even when we were in these little areas up here and we were doing W's, and it came all the way back down to test itself. And then this one here, you know, it fails. And I mean, you want to know what's funny about this one? It's higher than any other pattern. And everyone that's associated with that coming down to its B point has now just been made into a buyer. Isn't that interesting? The favor of the hedge funds that accumulated their positions, they will be looking for a hedge for the end of the day. And long traders that are individuals won't know what to do when they're literally sitting there long with no hedge trade and they watch most of their profit come back. It's going to be a tough one. So it's good to make sure that we're focused on capturing that hedge. And what's beautiful about it is if you're using half or less the size of your core, you have to lose twice on the same level to catch up with how much you're making on the core. So that means that, unlike, the individual that's trying to fight against this trend, let's say they don't have a long, that means they're not making money every single moment that it goes higher. And if they try to short it and they lose money, that's just a straight loss on their account. Now, if you're holding 10 in a hypothetical situation, like 10 shares, and then you're shorting with 5, that means that if you lose at a particular level, you're actually still just making 5. Like at the end of the day, let's say you shorted with 3, you're still actually making 70% of your position value. Instead, you could be wrong 3 times using 3 shares. So like let's say for instance you took 3 and you actually managed to take them off all at a profit while you're holding your 10. That means you're making extra money while you're literally holding your 10. And it's like you won't find yourself in that position unless you plan for it. That's why I keep reminding everyone. I call it the habit of hedging because you have to be in the habit of doing it because all you'll think about is the existing trade that you're in and where you want to sell it. And you know what happens when you sell it? You lose control. At the end of the day, if there's such a big risk and you think it's going to come down so hard, try shorting it. At the end of the day, keep your long because when you're wrong, you'll remember why you're holding. that's a brutal lesson, but it's true. At the end of the day, it's not a trend that's really easy to fight against, and you'll remember quickly why you wanted to hold that long every single time you try it and get stopped out. Now, if you try it when you're holding 1 NQ from the bottom and you try with 3 MNQ, you actually have to lose 3 times. If you lost 3 times, you're still making 1 contract's worth all the way up because you would only be losing 9 at the same level. But you know what's crazy is you'd have to take that 3 and get stopped out, and then it would have to come. You'd have to take that 3 and get stopped out. You'd have to take the 3 and then get stopped out again, and then you'd just be making the value of 1 MNQ. So you can see the power in holding and acquiring NQ at an extreme and then trading against it. With MNQ, you can literally use, so 1 MNQ is worth 10% of the position. So you can choose how much you want to go against it. Let's say for instance, you find it a really juicy move. It could have a 61% retracement of the entire thing. And you're like, "All right, well I'll take 5 against it." You know? But maybe I'll start with 3, start with 2. You don't have to get the whole thing right away. At the end of the day, you can choose to have some flexibility with your entries as well. You don't have to buy them all in at once. Like let's say for instance, if you have a 188 200 like we do up here, but let's say it's a really bigger picture one, and you know it could use both of them and then reverse. That's a big distance, right? So why not start with 1 at the 188 and try and acquire 2 at the other side? Your average price will drop, and the first one that you sell off will be the worst contract. As soon as it pops up and you sell 1 off here, this contract's gone and you're left with the 2 from the bottom. Easy to protect because you can put your stop at the extreme. That's the key to that movement right there. Really, really good. And like right now, the elephant in the room is this trend line. But I fear it breaks like crap. It is undeniably the most attractive uptrend in the environment right now. We do have another one that's here, and these are levels that otherwise could provide an attractive edge for the break of them. But I think that first we fake break. First we grind. I think that the day and age of doing this move has come to an end, and we do this now. And it's like, well, what do you mean? It's even higher. You think it would be easier to come down. Well, why didn't it get to that B point right there? Every W's worked today, but this is the highest one, and it hasn't played out. It's a bearish pattern. It's higher than ever before, and it decides it has the audacity not to play out. Look what it did to the people of the 188. It turned them into support. It's supposed to be a resistance level that takes us down to that point right there. Now remember what the gold bar is. The gold bar is a 188 200 that relates to this point right here. When I drew this originally, the pattern was this. A bearish 188 200 that was connected to this B point right here. And you can see that 188 200, the white and the purple. It was along. I drew it crappy, but it was the gold bar, okay? And the bottom of it was the 188. The top of it was the 200, and that's how that worked. And essentially, it was designed to come back down to this level. It played out early, and that's fine. But at the end of the day, here we are at that level, grinding it now. And it's like, look at the amount of progress we were able to make on that level Like, and also, it's not the first rodeo. Like, look at where that high ended there. And now I'll tell you one thing: this was never a 188 when that high was made, but that high is pretty significant, I'd say. And for it to turn it into a 188 200 is kind of interesting to me. And then for it not to even use it, the audacity. And then it's like, well, now here we are, we're using it, and it doesn't even care about it. It's like anybody that tried it has just lost money if they didn't take profit on the blue line, right? And that's interesting because that's the only place I said it was supposed to go, the blue line. At the end of the day, it showed that the blue line was incredibly valuable by spending 5 minutes at it. And now we go up then sideways. Right now, this is part of up then sideways from what I can see. Up then sideways that leads to more up. So we're done with this. And these red yellow lines, what I'll do to insinuate that they potentially can have a fake break is I'll make it kind of dimmed out like that. No good. Kind of there is likely to be a fake break. Very likely. So beware of a short squeeze. Again, eyes. There we go. You want to know what I think that we could do? I think that we could go ahead and put these fibs on to yesterday's pattern, literally, and then go to the 261. Go to the 261. Oh, where is that? That's my red zone. I like that. I really do like that. And let's use that red zone to come back to the 188 200. So this level comes down essentially to that level. Yeah. Yeah, something like that we could see. Something like that we could see. Depending on how it dumps when it dumps through that area, we might even get to the B points later. We'll see. But right now, it has been very tough on people. And this level, this is the next level they're going to be tough on people with. We're going to go ahead and mark that too. So I marked the other one. I marked this one, and take those off. Right? Or no. Off. Right. Yeah, this is dying to have some sort of fake break. And it's like, you know how we did this blue and white or blue and yellow line, and it's coming back to it, coming back to it, coming back to it. I'm like, really, still coming back to it. I mean, we used to have a line like this today. I did remove it, I think, but this one is starting to insinuate that we're going to have consolidations that'll suggest it'll be a little difficult to continue using that trend line. But that's okay. And I think that this zone is fine and everything, it's cool, but I would rather put a consolidation up on the 261, make everybody wrong at the 188 200, get them to the 261, and then grind it. Grind it. Like I said, fake break if anything. But whatever's going on with this trend isn't gonna be really progressive for short sellers, but rather squeeze the crap out of them, which is like basically putting pressure on them to become buyers when they're already trying to sell high and buy low. When they're wrong, they sell high and buy high, and that I think is the basis of this trend right now, convincing people to short it and then stopping them out so that we can advance positions that are acquired on the bottom. And the positions that were acquired on the bottom were all because of the major selling in the morning. A lot of the people are around in the morning and they can be part of this, and a lot of them were made into sellers only to be bought out, and anybody that bought into that selling is now at high of day. More action on this blue line though. I think that's what we're going to see when we're done with all of this, is that this blue line is starting to take over for the blue and yellow. Yeah. I'm going to go ahead and remove these two, because I find it interesting that the 188-200, it only came down to the 127. The B point's never been hit. The 261 is up at the high, and that's a gold dash line. And I'm just going to leave that because that's the only one I'm really interested in. The gold bar is the gold bar, so that's interesting. But this is a 261 that begins the green zone, an appropriate level to get a grind. And I just, what's crazy is even using the gold bar. Like, it's like I'm in the gold bar. I want everyone to see this is a range. This is the node. Look at the volume. It's all in the gold bar. So more than enough distribution to be able to take some off in that environment if it was a target. And that I think it was many of the institutions that move the market. Or else why would it get such a precise response and then a particular retracement that didn't play out a pattern just to get back and provide more volume at the target? And then to go up, then sideways, then go up again would be quite interesting, because where'd that come from? That never happened, did it? It always went up, then sideways, and then came down. What if we don't do that anymore? That could be interesting. This being a fake break would make that the case. But we talked about that. So, doesn't mean the move that comes out of the top won't come back either. It could totally look like this. But it leaves this movement as sideways, and then it leads to upwards movement, which is quite a possibility in this environment. Regardless, people holding from the bottom are going to be holding whether it makes an S wave or pops out of the top and never comes back again. And that's the idea. No stops should be dragged above the blue line, of course. And it's like each time we've done this consolidation, like to come down. And you would think that even higher would mean that it would be even better at coming down, because people, sell high, buy low, right? But then we see the most change in environments that like this, because we've actually changed a lot to be able to get here. The distance that we made out of the bottom has certainly come out of the top, not quite the biggest distance, but maybe this one, out of the top of this range. Yeah, we've managed to do a bit more than that actually. Not quite this distance though. That would look like my 261 ironically. If we did this exact same distance out of the top of this range that we did out of the bottom, right? Where would that put us? The gold dash line. The 261, that is. New trend. Yield one's broken. On the short term, the last trend that broke basically retested and then popped out of the bottom, roughly the same distance of what we were popping out of the top and the bottom of the channel. The question becomes, is the blue line interested in getting tested again? As I said, no stops are safe above it, but just notice that we're outside of the node now. We're outside of the gold bar, and everything that we've done ever since we started that has amounted to coming back to it. Let's see what we're interested in doing in this environment. Because it is true that there is a certain counter trend move. You know, today the counter trend moves that we've been managing to get, you know, they've roughly been around like this size. Like we've seen this before here. We've seen it like many times in so many of the different pullbacks that we've seen today. And it's went out of its way to just make sure that it's done this distance so many different times. So is it safe to ever drag your stop within its path of actually making this distance? Because literally it does this distance so much. Why would we ever drag our stops within its path of being able to make this pullback? Because it's so standard. That's why I call it standardized pullback, or your average counter trend pullback. You know, and is that what we're doing? Because until we do more, that's all we've done. That's the interesting part about it. Unarguably, if it's only done the counter trend movement, that's all that it is. You know, so I can't argue that. I tried. I'm like, if there is an argument to it, then we'll find it. But it's 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 pretty nice when you can find that there is a fact of the situation. Like, you know, I like to compile them. Like right now, it is true that we're inside of a large uptrend, the red yellow line, and until that breaks, undeniably we are in an uptrend. Now, funny enough, the same thing is true with this downtrend here. Until that line breaks, undeniably we are in a downtrend. Now, funny enough, by the point that this gets to the tip of this triangulation, it will have to pick which line it wants to be part of. One of them will have to break unless time freezes, right? So at the end of the day, we have to prepare for this consolidation to come to an end with such a significant trend break. And I mean, when it makes a triangulation like that, it doesn't hurt to actually like go back and look at other triangles and see like, hey, is it actually trying to do the same thing that it was doing before? Now, I want to talk about one thing. A triangle, it's in the name of like it is three angles, triangles, like triple angle. And what it has is three angles. And basically what we can see with those angles is literally this triangle that I pulled over here from before, it had that downtrending angle, this uptrending angle. Why is it the case that throughout the new move that we've had out of the last triangle, that it has followed the same angles as the previous triangle? Now, I tell you, it's not the same triangle. It's not even the same movement, not even close. It's going down in this triangle, it's going up in this one. Now, it could be inverted. I didn't think of that. But um, at the end of the day, it is true that the confinement area is held together by the same angles. And we can say that that's a fact. So that becomes an understanding now, not an opinion or anything. So that's powerful, in my opinion. So that's how I think of it, at least. You know, it makes a lot of sense to be able to say this is a factual piece of analysis. You know, it's true that we are in these trends, that we do have this as a situation, that we did do this before, and you know, what was the result of doing these angles before becomes the next question. Well, I'll tell you one thing, it was part of a mighty consolidation that took more time than we have left in the day, it looks like. So that's not going to happen. Not that it can't, but it's just, Actually, no, it could happen, but I don't think it will. It has enough time, but it's not positioned to do that. Now, I'll tell you one thing. When we confined ourselves here before, the movement that we did out of that triangle undeniably returned back to the tip from both directions. Now, it wasn't even on both sides, but it made an effort to make sure that everything out of the bottom of the triangle was bought up and everything out of the top of the triangle was sold back down. And then it was done debatably. But it was done with another move that was very similar to the move that just finished it. This move and this move, very similar. Of course, the only thing that's different is this one carries on going. I mean, it's the same thing. At the end of the day, that's fine. And, it's good to just have that as an understanding too, because it's a fact, like I say. So I like to compile those facts. And we can see we just came down to snipe that blue line again, which could lead to a positive response of the red yellow line like we had before as well. Which is absolutely okay. Putting a siege node on here is exactly what we're doing. We've managed to put some volume in that area. I think we're going to do that again up here. It reminds me of what could be like an N wave, a phase A. Could see that. This being the circle at the beginning. Yeah, like, we did one here and it was like that. Like that. It's smaller. It's different. But it did this before, so it's in the business of doing this while it's been in this trend, so it could be relevant, right? Because after all, if it was in like trend, 7 ago, I mean, it might not be relevant because it's not doing anything that's in that anymore. Oh, I just want to show this real quick because this is after hours movement, and it went 1, 2, 3, 4, 5, but then it did a 3 drives pattern and got smoked. So that's called an ending diagonal. The 3 drives pattern at the end, it can lead to a short-term profit target of this high, and then it obviously, as you can see, can lead right through it and end up smoking back the entire move or most of it that we can see there. Now, undeniably, we're continuing the triangulation. It's using that space that it has to the best of its ability because it knows it doesn't have long. And now we're in the business of breaking one of those lines because I mean, we're closer to breaking one of those lines than we ever have been before. There's less time in the triangle than there ever has been before, and that will always be the case until we leave it. And that's just an understanding again. Now that the yellow and red line is somewhat having a really terrible break, what this can do, turn all the emphasis onto this level. Contrary to popular belief, nobody will be expecting that. But it's not everybody that moves the market, contrary to popular belief. It's the few teams with all the money. And that's the thing, when we come up to events like this, it's very important for those teams to make sure that they're protected. And what does it mean when AMD earnings could come out, when there's a Fed meeting that could come out? It means that all of the people can band together and trade in the same direction. That's a threat to the people that have all the positions and all the money. Because if for the moment, if the people gain control, then who loses it? The people that have constant control all the time. And when huge parties of the public are invited to these events, the institutions better be hedged. Because in the event that those core positions are threatened, then their exposure and their control is also threatened. And obviously, there's nothing better than it being able to come down and wipe every individual out, them profit on the hedges while that's happening, and then at the very bottom, reverse those hedges into more core position and continue going up to repeat the process again at a later time, at a later high. And it's like not always are they going to be able to position themselves the way that they want to be, but I'll tell you one thing. The best way for them to be positioned is to keep everything that they've ever bought and to make sure that they can manage it by hedging appropriately at the perfect time to effectively protect any long-term exposure. And they make money on the short-term dip, then essentially keep that long-term exposure and that long-term control and that long-term ownership. And I think that they've tried in the past, selling it when things get risky, like the individual does. They're like, "Oh, I'm in Apple, and it's going up, things are getting risky. I sell it. You just get out and it's fine. Nothing to you. You sell your entire position off. The market doesn't even think twice about it. Doesn't even move down. Doesn't even do anything, right?" Now, the institutions, they try to sell 10% of their position. Apple already drops like significantly. Everybody thinks the world's selling. So that's not viable necessarily. What's viable is finding like a put option or some sort of option that doesn't show as volume on the stock itself, and then actually trading a derivative that's exposed to the short-term decline of that asset and keeping the asset and making money off the short-term decline. And as I say, I'll explain it in different ways every single day, just to develop that understanding clearer and clearer, because um, they definitely make it clear that the market moves for people that are employing that strategy and maintaining the lows. Like, what's the best way to have the integrity to endure this pullback? Like, if you know you're going to be in from here and your target is all the way up here, right? What's the best way to endure this pullback? Well, the best way to endure the pullback is to take it while you're holding, because you know that this low right here, it's not as good of a low as this one. In the future, when we come back down, this low might get knocked out, but this one might not. Just like, look at the overnight session. This low right here, how it comes almost halfway into the green zone. Look, came all the way back for the people that didn't find value in this little area here. And again, anybody that caught that little area there, it wasn't as good as the bottom. So they came back to get them. So why is this safe? It's not. This is the safest point. And if you can't position yourself from the safest point, then it might not be good enough for you. And that's respectable. And it's good to be picky, because if you're not picky, then you might settle for less. And that's not good sometimes. So definitely make sure that you're aware of what you're doing at all times, and make sure that your risk reward profile is in check. So like, you're willing to risk a minimal amount because the reward is so great. It's so much far greater than what you're willing to risk. So for every dollar that you're risking, you're willing to make 3 or so, essentially, at the minimum, or essentially have some sort of multiplier. So you're not necessarily risking a dollar and potentially only making a dollar. That may not be worth it, you know? You might have the patience to wait for something that's a little bit more attractive. But it may be less frequent, and it might not show up as much, or when it does, it might not be as large as you need it to be. So it may demand even more patience. It all depends. But what's interesting about it all is what the market is saying, like, as a matter of fact, is that when it makes a new low like this, and it pulls back to another one like that, and we manage to get these people out with a new low, this low is the one the market respects, and essentially it shows it, because the people that were exposed to this entire upwards move were not only just put to the test of integrity, but they were absolutely overlapped because they weren't the extreme. And that's the irony of it. And like I said, with the blue line, we could see something a little bit similar to what we saw with this blue and yellow line. Using it from both sides, testing it is absolutely fine. We can see that with this old triangle that we had in here, basically it's come back to try and test it as it left. It came back to try and test the old red yellow line as it left, and it's at the VWAP from the previous consolidation, almost at the B points and POC. Of course, power hour is getting close, and the day the earnings report is coming close as well. I marked that time, and then there's this time right here for the AMD earnings report. So the gold bar gives another short-term interest. This trend is going to be the first in a series of trends, from what I can see, to break. And the yellow trend, it's potentially something to struggle at the original break, and that's fine. This is also like the 61% retracement area. So like 61 is just a little bit lower on the high of that node. Didn't manage to get to it, which is interesting. The yellow trend in play right now. Ultimately, I'd like to see it get on top of this and start doing the up then sideways. I'll give it this time here, making an S wave essentially. But doing that again, what I'm interested in. Pretty much. Pretty much. And I mean, what the interesting part about it is it can show that to everyone right now. And this area could fit in here. And this time that we've spent in here could also fit in here. And why I suggest those times, because they're the times that we reversed. And it took both of those times to be able to generate this move or to be able to generate this move. So that's why I suggest that the original trend break could be like crap, because it's got a lot of time. The 61's just getting hit right now. The B points are all hit here too. We can move them higher to like this level. And we've got some other ones along the way here that really haven't been tested properly. I think this one too. See, I've noticed as well, when I apply a VWAP to the high of the existing trend, when we consolidate enough, what will happen to that VWAP? It will flatten out. And I've noticed that it flattens out to the B point, like it did here. Like this W, right? This W that was right here, that originally didn't play out, it played out back to its B point, but it also came to the VWAP, you know, and when we were here, the VWAP wasn't at the B point, but now it is, because it took that time, which is a little complicated, I guess, but it's the understanding I've developed from the environment. So we're hitting the first few targets here as well. And like, can anybody tell me how many green dash lines I've taken off? Because they're the only ones that remain. And I just put them in. Again, it's a day where, like every day, I cannot remember how many green dash lines I've taken off. They're all profit target levels, where if you expose yourself for the break of the previous trend, you could be in for those targets. Now, of course, if you're just holding from the bottom, you're waiting patiently for it to blow through the high, and that's fine. We got little ones down here too. They, like, I wouldn't drag your stop above those levels if you took anything at this point. Not to say that this is a good spot to be in from. It's very high, but regardless, we are going to get through the gold bar by the end of it all. The red yellow line's been adjusted, and it's no longer facing the same way as the last two. As we can see, this was the last two. There's likely to be a fake break, so we knew the trends were going to break, but then we knew that that break, the longevity was limited. So when we were at that low, I'm like, now we have a new red yellow line. Any hedges off of the previous red yellow line can be trimmed here. A continuation through the gold bar for positions made at today's low is what I'm looking for. Very clear. And a thing I like about this too, I'm like, this blue line, we went this much below it. I can see that very clearly. It's tried to make that move. From that little high that it made down there to the little low that it made here, like that's the move right there. It's associated with the blue line. And that's not the work of the public, ladies and gentlemen. Because try and find me a strategy that even considers that. I can't find one. Because the analysis that I choose to do, it's pro the user application. Like you want to you have to actively be doing it. It's not like, here, put on some indicators and watch the indicators. They're going to work in every single environment. It's about putting your hands into the mix and understanding every single fact to the moment and getting an understanding of how you can fit into that. You know, how the targets are all going to hit. Look at this other one hitting right now too. And I mean, it's like the more comfortable you are with it, the more you can hit them. Like, it's only 7 points, but that's not terrible. You know what? Yeah, those levels, they could be used on the earnings report. Like, we could actually stretch to the old blue and yellow line for the earnings report. So now we're getting involved with the red yellow line. It's been known to have negative responses prior to breaking, and it's an excuse to use the range. I can't help but notice that we've done phase A in here, like an N. We see that a lot. You know, it's almost like what we've done here. If we manage to make that formulate, be very similar to what we did here.
Yo, I gotta head out. John, thanks again, brother.
Yeah, man. Take it easy.
Yeah, cheers, man.
Cheers, man. A little bit of a negative response to the red yellow line, but that's okay. Like it doubled the distance out of that triangle, almost exactly. I can't help but notice that it's trying to use the same angle, that's all. Every seller is about to be made into a buyer, what I can see. Every seller being made into a buyer. We shall see the power of the institutions at the end of the day. We have to watch out for a retest of the red-yellow line. It's allowed to retest from the upper side. Mustn't drag any stops in its path of retesting. Orders are safe to be placed on the B point, the green dashed line, for profit-taking orders in the event that you're trading the short term. It could look like another test of that blue line. And I remember that blue line's supposed to be working like how the blue and yellow one used to. Like pretty interested in testing from both sides and making it pretty even on both sides and stuff. And I'm like, well, I like that with this one too. Looks like it's working pretty well. Hey, so it's allowed to have a negative response. We could even get it coming back down to highs like this one. You have to watch out. Not something that's meant to be really traded towards, but you mustn't drag your stops above the ability for it to test that level. Shall see the power of the institutions soon. This is a point at which it must be made safe. Yeah, I smell another squeeze coming, where they're trying to get people to short for the B point down there, and they want them to become buyers. And where are they going to become buyers? In the gold zone, where the institutions don't want to be caught buying because it's high a day. And the only way that they'll buy at high of day is if there's absolutely nobody in their way and they've accumulated a really large position that they can move the market from a far away place, right? And then if they open the next day at that far away place, like, and all the people flood in, they can just piece off their position and all that volatility the next day. But if they get everyone out of the way for the end of the day, all that they accumulated off the public in the morning, they can hold until the public's back in action. There'll be a lot of liquidity on the AMD earnings too. See it snapping right back to that target right there. That may be all it gives. We shall see. Beautiful movement though. It's a very interesting pattern to me, because it makes a high and a low here, but then it goes higher into a lower point, and then makes this pattern here. So what's funny about that is it literally has a head and shoulders here, like a left shoulder, a head, and a right shoulder. Then it has a low that's a left shoulder, a head, and a right shoulder, an all-in-one head and shoulders. The last thing to play out is the inverse. It just came down to snipe the target and just the target. Exactly how it should. Not my opinion though, just the mathematics behind the way the market should move. And it's like even in the short term picture, while we're breaking the trend, even exactly where it's supposed to come down to in the short term, we can calculate it. And anybody that's holding from the bottom is still good to go. And if you manage to find value and take into the short term target, it's exactly just the people that valued that same target that were allowed to profit there. Suspiciously particular. And I'm like, what? Is the work of the public? Find me another person that has a strategy that involves it getting back to that high, and I'll consider it. But I just don't believe it. When I look out there, I see a lot of moving averages. I see a lot of just Google patterns. Everything that's presented in like a like everyone's just spent like a week looking at YouTube, and anything that's on there, that's the direct stuff that they're trying to make sure fails. I'm like, well, of course they would. Like this 5-wave move, it's going to fail upwards. Like so many people today, they've been seeing it go down. 5-wave moves go down. It's going to go up, contrary to popular belief. Pause. This is a pause to make sure that anybody that's long sells their position because they're going to lose out on the big run to come after. So kind of interesting to me. They pause it because they don't want them to be in for the juicy bit. And it's turning the POC that otherwise held us back into a support. So we've essentially taken that downtrending move that, like, you know, was, oh, it broke the trend and everything. We doubled it. Literally doubled the entire downtrend. We're going to do more than that. I think it's going to quadruple it. Quadruple the original downtrend. But whatever it decides to do, like I said before, so long as you keep your stop at the extreme, you should be fine. If you're focused on trying to capture hedges against that trade, then any profit that you can make while it's coming down, when it's coming down, is just a bonus on holding long. You can see that it did make the N I was talking about. It went N. You know, after, you want to know what the last N did we were looking at? Look how far it came. You know, the size of the entire N, that entire pattern doubled. You know, could it do the same with this one? Interesting. Breaking the support trend. Likely will have a move that every part of its dip is likely to be bought back out again. It may take some time like the last, but that's absolutely fine. This entire area that we're putting here, this is all about node underneath the gold bar. Everything leads to that gold bar because the gold bar is debatably the most important level that needs to be dealt with. Because the thing is it didn't come down to its B point. You know, we came down not even to the red zone. And instead, we're already back up at that level. Not looking too good for it, essentially. That level and its ability to hold, you know, it had its chance. It broke its trends. Now instead, we've decided since we broke those trends to go on and break the downtrend that was responsible for breaking those trends. And essentially, every single part of that move has been bought back out. Except, you want to know one big difference about the entire situation? Is now that support line is not a 40-degree angle. It's not that much harder to keep now. It's literally a 29-degree angle. And you can see how much limited space there was with that trend and how much more space we've bought ourselves because of the trend angle decrease. Steepness is weakness, as I say. basically, I believe that this dump was made to convince people to sell their long trade. It was made to convince people to short it, and all of those people have been bought back out. Effectively, you could say they were wrong. So that's a major thing for the long trade to be at a point where it's able to continue again, having overlapped anybody that didn't find value inside of the consolidation, something I do find is subject to changing soon. But I suppose many people did chase it and we had to come back for them. And now that we've done that, it's back on track. And you can remember the first post that I made today is was this one. The gold bar was the first consideration of mine, and we could say that it is a very big impact on the day, having been high of day for quite some time now. The next thing I said was AMD to get back to its high. This is AMD. Sorry. I said AMD. Oops. AMD also looking good to get back to its high. That was when it was down. Looking good to get back to its high. We're at high a day, ladies and gentlemen. I'll tag that picture. I posted everything in the general too, play-by-play of exactly how the days went. I didn't post about the inverse head and shoulders at the beginning of the day, but that was certainly clear.
I posted the entry in general, non-exclusive as well.
Beautiful. Beautiful entry.
Yeah. Hedging against it too.
Nice. Yeah, I wonder what AMD is going to be like today, because the other earnings, they've undeniably been very anticlimactic. I can't remember. Like, I guess Tesla was nice. Like, Tesla had the most movement out of any of them, and I mean, it was clear that Amazon was going to break up when it did break up, but it didn't really move the market, which is kind of interesting.
AMD will move the market more than Amazon.
I mean, it really shouldn't, but I think it very well could. Yeah, yeah. This was the earnings right here. I remember, clearly, like, when it gets up and moves to its destination, the idea was trading it back towards the highs, and I mean, the market really didn't care about that. And I know Intel did something very similar too. I wonder what they're at now. Yeah, because you can see Intel, they literally just came down to that target level there too. They've actually never seen it again. Wow. Okay, so we have so like this. Obviously, it's not going to go back in time. I'm going to move it over. So it just came back to hit this high here, and it's also got that gold bar. We're into power hour now. And the AMD earnings is a little bit after the bell. It's 15 minutes after the bell. No biggie. They might freak out for that 15 minute. What is AMD? They're at the high too. Yeah, okay. All right. Well, let's take a look at them. Let's figure out what they're going to do. At the end of the day, we've got AMD earnings, and that is the big event of the day. So we've got a major move in here. We could be making a W. Everybody can see that giant W like very, very clearly. So we can apply fibs. From that B point right here. Hold on, let me take a look at the hourly. I know that there's a bullish setup on the hourly, and of course anybody that's exposed from that low, you potentially have like what was it, 37% they could make on this? It's absolutely insane. Oh no, like 40%, but still pretty hefty if we manage to make this move out of the other side, which we've been doing quite a lot. Now I can tell that AMD is getting close to the first of the three lows. This is another level that I think is going to be really important on the short term. We're going to go ahead and mark that in there. And you know what? I'll even go ahead and put an alert on that. And D points, hourly, create, good to go. Oh, no. Not just that. It's the first of the three lows. And then it's like that. See if it shows up. Yeah, it does, but my writing doesn't follow it. Not the right one. It's gotta be. Yeah, on the short term, we're looking at a W forming, which is ironic because a W is a bearish pattern. I can see that just like the one that we saw earlier, it had a W here, and its design was to come back to hit that point there, just like this W's design could be to come back and hit this point here. This is a dangerous spot. Like if you look at what we've done here, this is a giant volume node, right? And effectively where we are right now, it's seemingly the same distance out of the top of this node that we've done out of the bottom. And if I show you that node right there, it's very centralized. So ironically, this is actually a bearish pattern on the short term, but it's not positioned well. Like we look at the daily, for instance, you know, it's at the like lower end of a downtrend. A bearish pattern is not very effective at a time like this. It looks to me like we've actually made a 61% retracement and we're testing it from the underside. That's another major thing that we're looking at here. So like the entire kind of 61 here, that 61, we initially responded to it, and it's like we want to test it from the underside, and that would look like getting the first of the three lows. So that's a major expectation from what I can see. Very clear, very straightforward. We push to the highs again. You know, everybody's been bought out of every single selling position, or they're down hard, right? That's the point we're at right now. Somebody finds value in it. Interestingly enough. And tomorrow will be different. The methods and so on used today, it's not exactly going to be the same tomorrow. Things change, and you have to change with them. Contrary to popular belief, because it seems like every individual is honing one trading strategy that never changes, because that's the one strategy that will make them money in every environment all the time. And I'm like, that's a bit much. But in order to keep control, I've come to understand that you have to change because the market does. And if we don't, then we're not in line with the changes of the market. And how can we be making money if we're not in line? with the changes in the market. That's the thing. And it's like when you've put a bunch of hard work in and you do understand many patterns and you do understand the way the market works and you're constantly rewarded for it, it's not a negative thing. But if you don't know a lot and it's like, oh, you feel worried that it's going to be a risk that if you do anything that it's going to backfire because you don't know anything. And that risk, that feeling, it's just because it means that you do need to find something that makes you comfortable, and understanding makes you comfortable. And until you understand, it is uncomfortable. That is like it's a bold way of putting it, but damn, is it ever what I believe through and through, 100%. And then when when a task that is otherwise, scary because it's new and you don't know but a bunch about it, when you've conquered it and you figure out that you do know, and you can get through that environment without feeling negative, it's huge. And you have something to it's like something to feel positive about, I suppose you could say. And it is the control. Because the only reason why we worry is because we don't understand, or because we don't know what's going to happen to us. And that's why worry is there. But if you know exactly what's going to happen to you, then it's hard to worry about it because you know the result. And before you get into the trade, if you're comfortable with the parameters of that trade, it really alleviates any worry that could be had by entering the position, because you know the reward is that much greater than the risk. And that's the way it should be. But I do remember talking about this 5-wave move as soon as it started, and I said the 5th wave would fail, and it did. Effectively, anybody that's tried any 5-wave with anything to do with this move is it's very tough. But essentially, you can find very small movements. That's fine, but anybody that's tried to get longevity out of it's been going through trouble. Smaller movements, if you're going for aggressively making it protected by the time that the small short-term profit target is hit, you might have to do it 11 times, but you'll end up with the bigger move in general. And each time that you do it, if you make sure that the majority of the trade is off, like if you're doing 3 in, 2 out, you're letting one run kind of thing, and that's like the portioning. You're taking off like 70% of the position, and then letting the rest run, if that. But that 70% starts to add up every single time you take off 20 points, 20 points, 20 points, and it's the majority of the position, 3 of the 5 or something like that you're taking off. Every single time it comes down and you have 5, you take off 3 of them. The 2 is what you can let run. Sometimes you take off 4. If you know it's going to reverse against you, then just do 4. Anyways. And it's like, having that down as a plan is good, because it's something that you can say is part of your trade management strategy to remain safe throughout the hedging process. We're in the act of coming back down to test this level. This is exactly how we've done many Wyckoffs in the past. I'll pull it out. Same thing. Check that out. We come to attack the preliminary support. A lot of stress on the downtrend. Because basically, just like it's managed to come out of that to a new high, it's managed to come down and then make the N. And then from the N, it came down to test the original support, and it's currently in that phase. It looks like it's struggling ultimately. That is currently where we are in the sequence of things. Made some B points underneath here. Basically a new a new blue line is able to be drawn here. And we're interested in testing it more than the old one. Turn this one down. We're interested in testing my new one. That's fine. Just a matter of time. Blue line. Beautiful movement. Normal test of blue line. Breaking back above it could threaten the yellow line above, which is beautiful. Good for continuation. So now we're here. Effectively come back to this point. Pretty much. Left a little B point in here. As insignificant as it may seem. There it is. Smashed. Beautiful movement right through it. Nice big candle. Nobody else finds value, just same spot. I tell you, they move the market. It isn't all the people doing it, I tell you that right now. Not anymore. Like the 60s. And now it just did that thing where literally you could see where it was trading and it spiked up and literally came back down to every single person that didn't buy into the little choppy, crappy area. See it over and over again today. This is the smallest version I've seen. And the yellow line is still at risk of breaking. Well, both of them are. The gold bar is at risk of leading to the green above. Which is a little bit more of a decent move. Like I'm looking for it now where it's like which one is going to be the one that doesn't come back to the node, the one that goes up and sideways and continues. And I think it's going to be something to do with the gold bar. Originally when I looked at it, I was expecting that to go on in association with the gold bar, but effectively everything was more drastically sold off on the break of these levels and effectively bought right back out again, because now what we've managed to do is we've managed to take this movement here and move it like that, which I think we talked about that earlier. So it's definitely something. And I leave all these lines on because of the increase in volatility at the end of the day. Could go to the more extreme levels, so we can leave more extreme trends. I'll tell you one thing, we're establishing a POC on top of the support where it used to be below. We've almost put as much volume on top as we did below. And as the POCs before this one, any of the pop that we're about to see, subject to being coming back. However, it's getting riskier and riskier to hedge it back because we're closer to this than ever before. I recall something else. When we were in this last consolidation, we came back to the VWAP, and we didn't do that now. Why not the big pullback that it's used to making? Comes the question. Instead, what was resistance has become support. As grindy and slow as it may seem, it is the case. put some emphasis on this one, as we've got basically 3 consecutive lows. But it's not really consecutive, it's just 2 lows and then an even lower one, but it doesn't matter. This is the imbalance. Again, I find us on the brink of a breakout. AMD. They might have a little bit of a snap down before they actually pop back up. Watching them. Because AMD's been climbing this entire time that we've been doing this on the Nasdaq. Interestingly. Breakout for the imbalance. Let's take a look. It's funny too because I see in the tweets thing here that they they're saying that the imbalance is to the sell side. I don't think it's very much at all.
Yeah, I've got that whole channel muted.
Yeah. It does give like crappy alerts of exactly what it's been doing. The imbalance, except it's so subject to being changed. I don't even know if that's from today or what. Curious to see what it does because I think it's positioned to go up. Initial imbalance might not really impact things. I'm curious about what AMD's imbalance is going to do as well because they have their own imbalance. Yeah, they're 600 to the sell side doesn't anything. Retest is complete. Volume's kicking up a notch here. Towards the end of the day, of course. I want to see AMD rival its highs again too. Get involved with this 188 200 up here, just like it was the gold bar from yesterday. Like I think, it's giving me deja vu, like heavy deja vu. Because remember what yesterday looked like? Yesterday looked like this. It's like it was running up to a 188 200, like it has here, gold bar. It was related to this point, which is never seen yet. And it broke trend to reverse to that point and beyond. Like I said, I'd like to see us get through it ultimately. Gold bar doesn't provide as much risk as, people would think. They're trying to thread the needle right here, like I say. They're trying to make sure everybody's out of the way for the end of the day so they can make their move and seize control of the situation. They have control. This old blue line that I changed to use, we can see that it is getting responded to. Both directions, we can see it move like this, responded. And even here, both sides right there, and then left it to do both sides again. Beautiful movement. Respect for the blue line. That's after I changed it from the blue and yellow line, which was getting that same respect in the morning. Different kind of trend line. As we can see on command, we're looking at the yellow bar on AMD, and we're looking at the yellow bar leading to the green one on the Nasdaq. Nobody messes around with these. And little highs like this have been formed. They're not to be anything to drag your stop above. They remind me of these ones down here. They don't have to get hit. Say it again, they don't have to get hit, but they do frequently. Ultimately, no stops are safe to be dragged above that level. But I'd love to see it shoot right through all this crap and blow right through to my red zone. Beautiful gold bar on AMD. All profits can be adjusted on AMD if anybody did take that, but why so much precision on AMD? Like, it's exactly where it's supposed to move. Like, I ask it to move to where it's supposed to go, and it does it. And it's been doing that all day. So we can see very clearly it follows a strict set of rules, and it's not a matter of my opinion, but a matter of just the work. and it respects the way that I put the work in, and we can see that because it responded exactly from the yellow straight to the green. AMD hit the gold bar, and no doubt the positions that have been acquired from the people that move the market like this, they're certainly looking at the red zone. No doubt about it. They just don't want to pay for it. They want people to short it, so they put their stop here, and then when they put a little bit of volume, it triggers everyone, and then they all blow right through the top. But like I said, it's really important to make sure that you have a hedge going for the report. In the event that there's a counter trend move immediately on the report, it's nice to drag your stop into it. It might make us take that a minute before the report's released. And it's not going to take a full position size, but half, and do it in two parts. So you can take 2 and then 3. Manipulate your average price on the 2 by taking 3 at a higher point, raising your average price, not uh, not by too much, but it's okay. But it's like a task. It's like of the day today, regardless of especially even if you're practicing, one thing that you want to be doing is can you position yourself to be able to have a short that's safe for the report? And each time that you get your stop and profit, it's like mission success. The name of the game, the job, the task at hand is to ensure that you can get yourself hedged for the report. And it's like, that's the name of the game. This is the closing bell. So a lot of stocks and options traders cannot trade anymore. Options traders cannot trade anymore. Stocks, they can be traded, but on limited platforms and such. Shall see. End of the day here. Got the report coming out at the next blue line. Still have 15 minutes, so nothing too crazy. It's not like our normal reports where we would get like the usual reports where we would get some movement into the close. It looks like it's pretty centralized, and it's at the gold bar that we were talking about at the beginning of the day. And it's like, this is the gold bar at 9:30 in the morning that I basically looked at, and I was like, today is all about this bar. That is what we are at. Name of the game is to get here and spend our efforts trying to be exposed the best way possible to get this level. Two minutes after the open, it was apparent that that was the destination. And it wasn't because of today's analysis, ironically. It was because of putting the work in yesterday and being here till the close that really allowed me to get that analysis that was so important today. Better one. Even bigger 188 200. It goes with this level. And on responding to the VWAPs down below, it could be very interested in making a snap back to the current lows. Because it's moving on its own. AMD ain't doing this. Anticipation boost on AMD could be on the table soon. I think that they're trying to find that window where people aren't really looking, running away from them. A lot of people will be short, so it'll be a squeeze run, which could add to the violence of it. AMD push, let's see it. It's terrible. Yeah, they're moving exactly against each other tick for tick right now, which is kind of intriguing. The Nasdaq did come back underneath everything and snap to test every single one of its lows that it made in here. That's what it was supposed to do. But it didn't use the VWAP though, interestingly enough. It's a pattern very similar to what we've been seeing coming into the beginning of the day, like with that bow tie look to it. Yeah, I'm curious too because AMD's been known to move pretty heavily, like what we could be actually interested in. Not even just this level, but I'm interested in this 261 up here. Yeah, we're coming first to the three lows, which is that area I just marked. Okay, see that. I think I saw this today. We went over this pattern earlier. It can have a left shoulder, a head, and a right shoulder. A left shoulder, a head, and a right shoulder. So it's got me looking at the 105 area too. Oh. Nasdaq's interested in breaking the downtrend is the push on AMD. It could be felt on the Nasdaq. Still trying to push that out, but people are in its way. A lot of sellers at the 188 200 gold bar in this case, especially after seeing what it did on the Nasdaq yesterday. Got less than 5 minutes till the report now. That pattern that I just found on the hourly of AMD, like this is the left shoulder low and it's the left shoulder high. The head, this is the head. This could be the left shoulder and this is the left shoulder. The components are all the same. Left shoulder to left shoulder to head to head. From right shoulder to right shoulder. This, that. Remove. Because like it goes up here, goes up here. Goes down here, goes down here. Up here again, up here again. Biggest move, largest move. Up again, up again. Down again, down again. Same thing. That happened here. And if it is doing it, it can be recognized. And if we are to be positioned to be able to do that again, then it's best to understand it. And it'll take a while before the public even notices we're doing it. So the more difficult and more precise it is, the less likely there's going to be a bunch of people involved with it. And you'll come to realize that the less there are people involved with it, the more free it can move. Contrary to the popular belief where they think that the people move the market.
That's an interesting thought. seems like the people end up working against themselves and don't actually move. Yeah.
Well, yeah, the people they end up taking profit so quickly into the move usually that it can't get off the ground. And I notice at the end of the day, it'll employ the same kind of strategies without the people in there because it's quote unquote been too difficult for them. Then you can see it move really freely. And the thing is the public on the whole doesn't recognize it because when they're done trading and it's stopped affecting them, they literally don't even look twice at the market. Look at it hitting all the targets here. AMD is hitting every single one of the gold bar targets.
Oh, it almost got to 100.
And it's not even released yet though. So it's done a relatively large spike up in the upwards direction. It hit the major B point right there. This is the moment of the report. And it tanked. Let's see if it makes any kind of impact on the Nasdaq. Not much so far. Every B point has been cleared, and it's looking like it actually wants to have a little bit of a bounce on AMD. Watching for that. Bounce on AMD. The market doesn't care. Got a little bit of movement, not too much. Any hedges want to be trimmed off? Like, if you manage to capture any kind of hedge for the report, you want to trim it off. Look at that bounce on AMD. Wow. That's where you'd take profit. Wow, what a bounce. Straight back up into the B points. So again, looking for another bounce, perhaps up to levels like smaller, short term. Beautiful, beautiful, beautiful. Another movement on AMD, absolutely cleared out right there, exactly as it should. Like, where can you find that accuracy? You know, every single one of my green dashed lines, you know, it's been hit. And this one right here, the very, very top one, you want to know where that is? That's the first of the 3 lows, ladies and gentlemen, right there. And we're going to break through it to the upside. Nobody knows that yet. This move, the entire move is going to go up. Nobody knows it. Every single barrier that we just got to here now, we're softening it so we can go through the top. Whatever the report was, doesn't matter. It's going to go through the top, so we shall see. Could take some time. Made like a 61% retracement of this move now, so we can see roughly it pulled back to the 61, another really critical level inside of the short-term move there. This trend can be readjusted. I can see AMD made 3 consecutive lows here and shot back up to the first of the 3 lows. The entire volume node that we saw here originally at the beginning of the day, it's been ranged, and I think it's going to still play a relatively large role in the future here. I think it's basically like this area right here. We had it circled earlier. We're kind of out of the bottom of it now. It's created a new trend though. So breaking that trend is going to be on the agenda. See what oh, it's funny, they beat their earnings. The surprise was 2.9%. I guess it wasn't as surprising as they thought it was going to be. But here we can see AMD 415 consensus was 0.68. They did 0.70. Surprise was 2.9. So it's pretty much what they expected. And it had a negative response. But it's just a temporary negative response from what I can see. And like this entire zone right here, like we put it to the test, but this range right here, they're gonna try and buy everybody out of it, I think. And this does get considered hit, but that level is definitely something of an interest. You know, you can see how that level was gold, and I put it there today. The idea that the 188 designed to go with this level is huge. Right now, we just broke the short-term downtrend. The volatility is low because the market's so far into the close, but I wouldn't be surprised if we saw some blocky like movement on AMD. Obviously, the Nasdaq, I mean, it didn't come down to any point that, like, literally, it's like if you took this move here, you know, and you took it through that last trend, the last move, they're the only people that it came back on. You know, technically, if you kept your stop at the extreme, you're still in on this move too. So it's like all AMD's move was capable of doing was taking back the original or the last portion of our trend. But I'll keep you guys posted throughout the night, and we'll see what it ends up doing. I think it's going to be a little slower till it gets quicker, but AMD is likely to be bought back up very soon. And their earnings report basically just cleared their day. Wasn't really much of a move. Like they could have moved 7 to 12%. Different B points could have been hit, but no, it didn't really move a whole lot if you really think about it. The entire move itself amounted to about 6%. And that was the 6% that it's already done today. So, yeah. Not really anything too crazy. But with that being said, hopefully you guys have a wonderful day, and I'll catch you guys later.
Sure. Okay.
Yeah, have a good one. Take it easy.